All right. Hello, everybody. Welcome back to another episode of the Market Open. We are live and we are a bit early today because today's a very important day. We have CPI in the next 13 minutes, and we're going to find out if this economy is getting ready to go, or at least the stock market is getting ready to go up. We are super green in the pre-markets right now. Palantir's up 5%, Nvidia's up 2%, Robinhood's up 3%. Pretty much everything is green. And I think it's green from an anticipatory perspective of like, hey, we think things are going to be okay. We think CPI is going to come in at 2.9%, which is what the economists are projecting. If we come in higher than 2.9%, I think we're going to have some issues. If we come in lower, I think it would be a massive sort of V shape that we see today. But pretty much every economist is expecting 2.9% on the headline, 3.2% on the core. If we come within those expectations, I think we should be okay. But we're going to find out in the next 13 minutes. Thank you everybody for being here, and also thank you everybody for checking in on me yesterday. I was indeed sick. You know, I don't like missing my show. Missing my show is not really what I do. I've done the show. I think I don't even know how long I've done this show. I think since late 2022, but really we started taking it seriously around mid 2023. And I think I can count on two hands, right? Maybe there's 8 to 9 times I've missed the show. And most of it was due to travel. It was not due to like, oh, I just don't feel like waking up in the morning. But yesterday, bro, I woke up and I think it was like 7:30 or 7 a.m. And not only was I shivering, I was coughing, I was sneezing, I was blowing my nose. I was like putting a freaking, I was taking a towel to wipe my nose every 2 minutes. And I was like, I can't go live like this, dude. Like, I just like, I can't go live doing this. So it was one of those things where like, I don't, one of the things that I really care about in life is kind of like a core principle for me, just from like studying people that I look up to, is consistency. And I think consistency is the hardest thing to do in anything, right? In anything, if you want to be successful in anything, you've got to be consistent, right? So with this show, Market Open, Market Close, it's like, that's the biggest thing for me in the world. It's like, you have to be consistent, but it's also one of those things where it's like, you can't really put out quality product if you're sick. Like in this line of work, it's not one of those things where you can just wake up and power through it, because if you can't talk, like people are just going to be annoyed by you sneezing every 2 seconds. So yeah, I hated that I missed it. Some people are like, oh, you missed it because it was a red day. First of all, yesterday was a green day. So, and it was pretty obviously going to be a green day given the bounce we were going to see. But second of all, no, I like going live when we're red, because you think you guys need me. I need you guys. It sucks when it's red, and it's nice to have a community where you can talk to everybody when it's red. It's not something to hide away from or be scared about. In fact, it's more important than ever to go live when it's red. I really asked myself in the morning, could I talk for the next 2 hours in a meaningful way? And I was like, I'm not going to be able to. I know I'm not going to be able to. So, yeah, that's why I made the difficult decision to not go. I think this is the first time I took a sick day in 2 years. I realistically think that. The only other times I've missed a show is because of traveling. Like, I really can't think back to a time where I woke up. Dude, I have done the show in some of the worst conditions ever. Like, I remember doing the show, SoFi earnings, October 2023 in Vegas. I had not slept the whole night, but it was SoFi earnings. And I was like, this is an important stream to go live. I think this was the day before Halloween or on Halloween, one of those days, very close to the end of October. I had not slept the whole night. I was partying in Vegas. It was my 26th birthday. And I was like, all right, Carlos and Chris were in the Airbnb. I was like, all right, it's time to go live. They're like, what do you mean it's time to go live? I'm like, we got to do the Market Open. They're like, what are you talking about? We're not doing the Market Open. I'm like, no, we're doing the Market Open. It's time to. So I've done the show in bad circumstances, never when I was sick. But yesterday I just realized like it makes no sense. Also, I haven't gotten sick in 2 years. This is the second time I'm getting sick in 3 weeks, which I think this is what AI is used for, these freaking balloons like this every time. But I think it's two things. A, my immune system is probably getting weak, which I need to do something about. But B, I couldn't avoid it. My mom and dad got sick. Dude, my mom had 100-degree fever. My dad didn't have a fever, but he was coughing like crazy. And as soon as on Saturday, I realized they were sick, I tried to stay away. I wore the mask inside. It didn't help. It did not help. I ended up getting their sickness. So StreamYard can do that, but not fix the audio. Yeah, dude, it's freaking ridiculous. So yeah, dude, I don't like missing my show. I don't miss my freaking show. That's something I don't do. Like, that's just, it's one of those hard rules that I have in my life. Like, I don't miss the show. This is like, there's some level of consistency you have in your life on certain things you care about. And if you really care about, you take it really seriously. But then I just, the other thing is I had to try. So I had a flight at 3 p.m. yesterday. I'm in an undisclosed location. You guys will find out in a couple days. And I also I felt like shit in the morning. I was like, if I could just get a couple more hours of sleep before this flight. And then, that's what I did instead of going live. And so the flight ride was still painful because it was 6 hours on a cold airplane. Why are airplanes so cold, bro? Like, why are they so? I get that we're up in the air and it's like freezing, but why don't they have a heater? Now, thankfully, I have the entire row open to me. I don't get this lucky, bro. I usually don't get the entire row open to me, especially because I picked basic economy. So usually I was just happy I got a window seat. I was like, oh, thank goodness. I could not, given how sick I am, I could not stay in the middle. I wanted an aisle, but I got the window. I was like, all right, at least I'm not stuck in the middle. But I ended up getting the whole row. It was nice to get the whole row, but then I was like, damn, it was United. But then I was like, damn, Delta was right. Delta said they're freaking Delta's guidance was like people aren't traveling anymore. And I'm like, well, if I have not had a whole row open in a long time. I'm like, all right, maybe people aren't traveling. So at the same time, I was like, thank goodness I have the whole row. But then I was like, it doesn't matter. It means the economy's tanking right now. So that's what I was thinking. Yes, my hair is crazy right now. I get it. It's bedhead. It is what it is right now. I just need to get better before tomorrow. Tomorrow is really important and I need to get better. So I'm still a bit sick, but I'm not as sick as yesterday. And so that's why we're here. Yeah, usually I wear a hat. Today I'm not wearing a hat. Today I just said screw it. So you guys are seeing my carp hair go crazy. See, Michelle's right. Everyone's focused on the hair. This is why I wear hats. I told you guys, my hair is crazy, dude. I need like a real stylist to like give me a new hairdo because this shit is just crazy all the time. Or I need a freaking perm or something. I don't know. I need to do something with my hair, bro. This year, I need to do something with my hair. But my hair is insane. Anyway, I'm happy to be back. I won't be doing the market close today, but that's because I'm actually working. Tomorrow I will be doing the market open, even though tomorrow's going to be tight, so it's going to be a shorter market open. You guys will see why. Tomorrow's going to be a fun day. But yeah, again, I don't like missing the show. I really don't like missing the show. And unfortunately, yesterday I just kind of had to. There was no way I could go live and do the show. I could have gone live yesterday, but I would be sniffling every 2 minutes. And I'm like, the people would be annoyed. Like, that's just like, it's not. Someone left a comment that was funny. It's like, are you really Indian if you take a day off from work? And they're right, bro. Indians don't take it. My dad has not taken a day off from work for basically 40 years. He doesn't take off from, dude, he was going to work during COVID. He does not take off. And so that's also part of my work ethic, right? It's like, but it's also like he does something different than me. I'm speaking to a lot of people. And if you're like constantly coughing and sneezing, it's not going to be good quality product. So it's not going to work. We got CPI in the next 5 minutes. That's going to be very important. The little bell is back because we're in an Airbnb and we couldn't bring the big bell. The little bell is back. Maybe the little bell brings us back to early February when we had a ton of green. So we're going to see what happens there. By the way, I am bullish Keurig. The Airbnb people were so nice to have a Keurig machine. This is the first time I've tried Keurig ever in my life. Why didn't you guys tell me Keurig is actually like, dude, why am I paying for Starbucks? Like, I think I'm going to buy a Keurig. Like, it took like 5 minutes to make French roast. The coffee is great. It's not like it's that much different from Dunkin' or Starbucks. I know this is ironic because I was making fun of Williams Sonoma getting into the S&P 500 over Robinhood and making fun of the fact that they sell $4,000 coffee machines. But a Keurig's not $4,000, right? It's like $5. Not $5. Like maybe $200-$300, maybe $500 at the most. So French roast, great coffee. Nothing's wrong with it. And so there you go. I'm bullish Keurig and bullish coffee. And hopefully the market is bullish in the next 4 minutes when it comes to CPI. So the market's up right now. We are green, very, very green. Robinhood right here up 2.7%. Bitcoin, and the fact that Bitcoin's trying to get to like 85 just shows you how much excitement the market has over the CPI report. A Keurig's only $80. Holy crap, dude. Yeah, I'm definitely buying a Keurig. This is like, I don't know why I've been buying coffee anywhere else. This is like so cheap. It's not like the Juros from Williams Sonoma that are freaking 4,000. But I did not see the U Season 5 trailer yet. I've been living under a rock for the past day. I've just like been sleeping and been sick. So I've kind of been disconnected. But I will watch the U Season 5 show. That's my favorite show on Netflix, so we're going to be watching that. But anyway, the markets are up right now. They're excited. I really hope we get a good CPI report. This is what the analysts are expecting. 2.9% is what we need. If we don't get it, I think we're screwed. I'm just going to be honest. We need 2.9. If we see 3% on the headline, I think we're screwed, bro. I'm not gonna lie. I like seeing 3% of the headline is not gonna be good. Now, I don't think we're gonna get 3% of the headline because it would shock every single bank that you're seeing right here: Bank of America, Deutsche Bank, Goldman Sachs, Jefferies. Like they tend to get it right. Usually, I mean, like they would have to really have all their research go the wrong way if they get it wrong, or inflation would have to be just like disgusting. So, I think we'll be okay at 2.9. Do you think it was leaked? Well, that's what everyone's thinking for why we were green. I don't think CPI was why we were green yesterday. I think the reason we were green is just because we got a bounce. We'll talk about everything that happened yesterday because I was keeping up. If you were following me on Twitter, you saw some of my posts on Twitter. I was keeping up with everything that was happening with Trump and Elon and all that stuff. So, I mean, I think yesterday's bounce was a pretty obvious bounce after a aggressive worst day of 2025. But we're going to have to sustain it now. And I don't know if we're in the market where it's like a V-shaped recovery. I think it's going to be more like a U. And I think there's going to be some dead cat bounces. And maybe yesterday was a dead cat. Like, I don't trust it yet is what I'm trying to say. I need to see it really sustain itself. And I don't think there's a reason to trust it. The tariff volatility is still aggressive. Now, Trump did say yesterday he's taking away some of the tariffs from Canada, which also got the market to be excited. I mean, I guess but like if Trump, Tesla right here up 3%, but if Trump like starts talking about why we need to have more tariffs tomorrow, like the market will get upset. So I think, again, we're in a really weird spot right now where markets really want to bounce because the earnings growth does not justify some of these multiples, in particular NVIDIA. Like NVIDIA does not deserve to be trading at, in my opinion, these levels at a 24 times PE with better profit margins than most of the Mag 7s, but as a hardware company too. But, this is where they're at. So I think the market's ready to bounce if they get the catalyst. And today's CPI in about 50 seconds is going to be the most important catalyst here. All right, let's see. And remember, inflation's also technically up because a lot of people were importing goods from in Q4 because they were so afraid of tariffs coming in Q1. Now it looks like those fears were correct because we do have tariffs on aluminum and steel that have gone into effect as of today. So those are definitely in. So now we're going to have to see how much of an impact does that actually have when it comes to top line CPI. All right, folks, 12 seconds. Here we go. We need 2.9. We really need 2.9. That's what the market wants on the headline. If it comes in a little bit higher, I don't know what it's going to be like. A little bit lower would be awesome, but 2.9 is what we need. All right, we should be getting it really soon. We should be getting it very soon. 2.9. Did we get 2.9? Let me refresh this. 2.8. Wow, we got 2.8. Oh my gosh, we got 2.8. We got 2.8. Do you guys see that? Hold on, where is it? We got 2.8. 2.8. There it is. Inflation rate 2.8%. 2.8. Oh, thank the heavens above. Thank God. Oh my goodness. We got 2.8. Markets are NVIDIA 4%, S&P 2%, baby. Wow. What a ripper. Hood's got to be above 40. Hood, not above 40, but it's up 6%. That's nice. Bitcoin 84.2. Look at that. $1,400 candle. It's a nice candle. Palantir 83. Amazon's up 2%. Meta's up 2%. Tesla up 6%. That's very nice to see. Tesla hit a low of 215 a couple days ago. Now it's at 243. Rocket Lab 11%. Rocket Lab also had some deal this morning, which is what's helping them. So they're up 11% right now. Redwire's up 4%. Royal Caribbean's up 1%. Carnival Cruise is up 2%. United Airlines is 2%. Okay, before we keep going, first poll I'm going to do in the chat, because I got to ask this question, is do you think that you can trust this report to have a sustained bounce? Archer's up 6%. Yeah, all right. So market likes it. We needed 2.8. We needed 2.8. Or we needed 2.9. We got 2.8. Do you trust the CPI green? Do you trust it? Do you trust it? Do you trust it? Okay, let's get some live reaction to this real quick, and then we'll get deeper into the numbers on what we've got with CPI. 2.8 on the headline. What was the core? Let me see the core real quick. The core was 3.1. The market thought it would be 3.2. Wow, so we went lower on the core. And month over month, market thought 0.3. We came in at 0.2. We came in lower on every metric. That's a good report, bro. That's not a horrible report.
That's another all-time high going back to 1913. If you look at core, that was started in 1957. It comes in at 325.47. And guess what? Another new all-time forever high. Go use that inflation tool on the Bureau of Labor Statistics and the website. And what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time, unlike today where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
Okay, Rick, thank you for that. Steve.
Okay, we'll get some more coverage on that in a second. Here is the actual report right here on CPI. So 2.8%. Again, that was what we got on the headline, which was very, very important. The index for shelter rose 0.3%, accounting for nearly half of all items increase. Again, shelter continues to be the freaking thing that gets the market upset. It's the shelter thing. And, Trueflation, a lot of these other websites that are tracking inflation, anyone who's been like looking at shelter in depth thinks that that's lagging, but the Fed says it's 50% of the increase. Shelter was offset by a 4% decrease in the index for airline fares and a 1% decrease in the index for gasoline. Okay, so this isn't that bullish. Gasoline one is bullish. The airline fares is kind of weird. I was making a joke that when I was flying to where I'm at right now, I had the whole row free. And I was happy that I had the whole row free, but immediately I thought, wait a second, is demand going down for airlines? A 4% decrease in the index for airline fares means that airlines are decreasing their costs to get more consumers to come in, which means consumers might not be as easily getting in, right? This Delta's guidance showed a 50% decline in Q1 guidance. Now we're seeing a 4% decrease in freaking CPI because of airline fares. That to me means people might not be traveling that much. The index for all items, less food and energy, rose 0.2%, following a 0.4% increase. The all items index was up 2.8%, excluding food and energy. Medical care, used cars, and trucks were up. Household furnishings were up. Recreation was up. Apparel was up. Personal care was up. Airline fares and new vehicles were the indices that decreased. Were the ones that decreased. Okay, so airline fares and gas went down. Energy, shelter, and pretty much everything else went up. Southwest is up 1%. JetBlue is up 2%. Where is Delta? They were down 20% yesterday. They are up 2%. Not really a recovery, but at least it's something. Bitcoin just below 84,000. Robinhood below $39. It's up 6.4%. Meta's back at 623. Tesla's up 6%, 244. Block's up 2%. You know what's also going to be really important today is who sells into the strength. Because you finally got a green day after what seems like 3 weeks of red. I think there's going to be some people that take advantage of this and say, all right, I'm out of this market. I'll be back later. I'm going to sell into this. Maybe some people buy into this, but we're going to see. NVIDIA's up 4%, and then Grab is up 2.78% as well. By the way, that company Grab's trying to buy GoTo, their biggest competitor in Indonesia. They had their earnings today. And in the call, they said that they would be open to an acquisition with Grab. So that could be some piece of news that the market runs on as well. SMCI right here is up 7%. Yeah, look at that. 43.60. That one's really moving as well. What did you guys say on the poll? 59% of you say you trust the CPI green. All right. Once the market opens, we're going to see if this green actually can be trusted.
Steve Leisman is right here looking at these numbers.
Yeah, there was a concern we would come in on the high side.
By the way, did anyone see Steve Leisman, who is the senior economics reporter for CNBC yesterday, say Trump is insane live on television yesterday? He went on like a 3-minute rant on why Trump's tariff policies are insane. So he's not happy with Trump and tariffs, and he took advantage of that yesterday to let everybody know.
Everybody said they were looking for upside surprise, so it's really good to come in below here. You got some help from food, Andrew, up just 0.2. You got a pop in the I have the egg category, but not eggs themselves on the top line data. Meat, poultry, fish, and eggs up 1.6% after 1.9 the month before. Dairy products were down. I don't want to go through too exhaustively. Energy was well behaved. You got a decline in airline fares down 4%. We don't know if that's a demand thing or that's just an energy thing being passed through. And then, of course, the owner's equivalent rent has been much better behaved right now. And where we are is we're going to see some impact of the tariffs. Nobody knows how much. I can't tease it out of here right now. I've been looking. I'd look for core goods used cars would be one place to look for it. That's one place where people are concerned. You might see that first initial round. We're going to see some impact in the months ahead. Nobody knows how much. It's very difficult to game it out right now. Right now, the street is looking.
The 10-year is not. Oh my God, the 10-year spiking. This is the opposite of what Trump. Why is the 10-year spike? Hold on. We beat on every single metric. Why is the 10-year up? Who has a theory on that? Why is this is not what Trump wants to see? You know what? I think Trump has a picture of the 10-year or a live ticker of the 10-year on his desk in the Oval Office. And every time he sees it spike, he puts out another tweet about tariffs to create more volatility. Why is this going up? Why are people not buying bonds right here? Why are they selling off bonds off of a miss on inflation on every metric, which is good? Like if just does no one trust it, or this is not what we're supposed to be seeing? We're supposed to be seeing the opposite.
Looking for rate cuts from the Federal Reserve. These kind of numbers get the Fed closer to where it could be, but you would think it would still be a little bit too hot for them to say, okay, I'm going to cut next week. Right. But in this trajectory, you can say, you know, we could maybe think about one if you don't get a big.
Oh, that's true. I forgot. Yeah, people might be selling bonds to buy stocks. Yeah, that's fair. That's a fair point. That's kind of obvious. Yeah. This is why it's such a tricky situation, dude. If people sell bonds to buy stocks, that pushes bond yields higher. That's great for all of us, but it's not great for Trump's agenda. This is why it's tricky, dude. It's really tricky to navigate what's going on in this market right now. And we're going to have to see how Trump reacts to this.
And lasting. In other words, this idea of the pass-through, it's the big and lasting tariff impact that I think would most likely stay the Fed's hand.
But you still want to see the CPI numbers tomorrow. PPI numbers tomorrow.
PPI is where you would see it first. But again, we talked about this for a long time. There's pass-through. And pass-through, you could reduce margin. That's bad for investors in stocks if there's a margin reduction. But it's better for consumers if they eat it. Remember that chart I showed that you were a little bit perplexed about all these stations along the way where tariff impact can be reduced. There are 4 or 5 places where you could absorb it. We'll see how much goes along. Has to do with how much competition we have in the business.
All right, so that's what we got on CPI. For those that are just joining, CPI comes in 2.8 versus 2.9%. Core comes in at 3.1 versus 3.2. The majority of you in the poll said that you trust this green. I want to say yes, but I'm still a little skeptical of this green. I think a lot of people are going to take the opportunity to potentially sell into it because they've been waiting. I mean, if you don't trust the market and you finally see a green day and you break even, I think some people sell into that. Now, granted, we're going to have to see what headlines come out today. SoFi right here up 5% as well. But it just shows you how quick the market can turn, right? Like, did SoFi deserve to be $10.65 2 days ago? Probably not. And now that it's back at $11.87, even if it might not last for the next few hours, like, it can turn on a dime, right? It's easy for this market to immediately U-turn. It needs a catalyst. But then the question is the catalyst enough to get people to hold and buy into this rally? I mean, Reddit was up 15% yesterday. It's up 6% right now after falling basically 50%. But is there enough momentum? Is there enough momentum? TLT, that safety trade everyone loves, that one's tanking right now. Not tanking, but it's down 0.5%. It was down 1% yesterday because bond yields are up. Nvidia's up 4%. This is going to be a little weird, bro. Trump, I think I'm getting more and more convinced. Oh, so it's like, so we've been talking about this theory a lot on the show, right? That Trump wants the market to tank in order to get yields to come down. We got another form of confirmation from this yesterday, dude. I know some people don't love this theory, but I can't keep ignoring some of the smartest investors of our time that are basically co-signing this theory. Here's what Ron Barron said yesterday. Listen to what he says towards the end of this clip. It's a minute long about how he's thinking about what the Trump administration is doing.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor. When stocks prices come down, sometimes value investors get pretty excited. How do you feel about things?
Well, it makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything. Yeah. I think they might even be intentional to try to slow down the economy, get rid of.
Look at what he just said. I think it might be intentional to slow down the economy and get interest rates down. I mean, this is one of the greatest investors of all time, in my opinion. Went super long Tesla, SpaceX when no one believed in it. He's sitting on, I think, $12-15 billion of equity within those two companies. And his argument is, yeah, I think Trump's creating volatility because he cares more about yields versus the stock market.
Stock market down to get to a different place for the economy.
Well, everything. Yeah. I think they might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents. Or, if you're running for election, but you do it now, get it out of the way, and then a year and a half from now, then things will look better.
So, I mean, look, I don't think this means that Trump is the smartest guy in the world for what he's doing. I think this theory is very dangerous. I think he's playing with fire. But more and more, we are seeing people that are in very high levels within the investment community basically agreeing that this is what they think the administration is doing. In fact, not only has Trump said this many times, but his press secretary yesterday, when asked about why the S&P 500 has lost all of its gains since the election, basically avoided the question and said, we're committed to tariffs more than the stock market.
Karen. Thanks, Caroline. Just back on the markets, you said that what we're seeing this week right now on Wall Street is a snapshot of a moment in time. But does the president think he bears any responsibility for the turmoil in the stock market this week?
Look, the president is unwavering in his commitment to restore American manufacturing and global.
Not to the stock market, right? And like the press secretary is just an echo of the president. So the president told her when asked about the market, talk about tariffs.
Dominance, and I think he doubled down on that this morning with his new statement and the tariffs that will be implemented tomorrow on steel and aluminum.
And he has said recently he's not looking at the market. He said you can't really watch the stock market, but all of the gains since election day have been erased in the S&P 500. At what point, how far do stocks have to fall before the president considers it a factor and changes course?
Again, as I just said, the president will look out for Wall Street and for Main Street, just like he did in his first term. And people on Wall Street and Main Street should bet on this president. He's doing what's right. Karen.
So, I mean, look, there you go. So the only reason I bring this up is because this is really good news. The CPI coming in lower than expected is great. It gets the Fed a little bit closer to cutting rates. The problem is the market has been thinking the Fed would cut rates because of fears of a recession, not because of fears of inflation coming down, because inflation is not meaningfully coming down. If you look at the CME Fed probability watch tools, we are at 41%. I think that's a little bit lower, if I'm not wrong, than yesterday. So rate reduction chances have decreased. In June, we are at 54%. So it's looking very likely in June that we get that cut. In March, we are still at 3%. So March 19th, which is 7 days from now, I don't think we're going to get the cut. But May, hopefully, is the next time for us to get a chance to get that cut. You guys are having great jokes in the chat about the hair. I got to make a compilation of these jokes. Style says, I'm going to get a $100 gift card to Great Clips. Someone said, I look like a guy the DEA would be busting. You guys, these are great. This is why I wear a hat every morning. I know my hair is too freaking distracting, but today I just didn't care, dude. I'm too sick to deal with all that. NVIDIA right here up 4%. SMCI up 6.5. PayPal's up 1.2. Robinhood's up 4.8. I want to trust this green, bro. I really want to trust this green. I just don't trust it yet. Especially with this 10-year spiking, I don't know how the administration is going to think of this, because now those beloved mortgage rates are probably going to go up as well. And that's not what Trump wants. Who would have thought, bro? Who would have thought? Maybe some of you guys thought, but I did not think Trump's term or first term or first, 100 days of his first term would be rooted in this idea of like, screw the markets. Let's just focus on yields. Even though that's kind of what he was telling us, but I guess I didn't take him seriously, or I didn't read between the lines, or no one took him that seriously. And this is how it's playing out. There was a good chart that we were seeing on the first couple months of his term in the stock market, and you can see Trump versus Trump 1.0 versus Obama versus, I'll see if I can find the chart, but pretty much every chart is going up and to the right, and then Trump is just like going to the bottom. The first 60 days of the administration, which is what we're seeing for Trump 2.0. Was that in his policy pre-election? Yeah, I mean, to an extent, when he was talking about tariffs, which I guess would, but I don't think anyone thought that this was the plan, that they were going to focus on rates more than stocks. Everyone thought they were going to focus on stocks and like just growth. But that's not exactly what's happening. As a result of what Trump's been doing, Coinbase is now going into India. That was some good news yesterday. So that's big for Coinbase, big for India, because there's a massive crypto appetite in India. Dude, I mean, I met a lot of people in India that care about crypto, just like friends of friends when I was there back in October. And when I would ask them about investing, they didn't talk about stocks. They talked about crypto more than stocks. So crypto is definitely a big thing in India. And I think Coinbase is going to have some success there. Look at the Mag 7 forward PE. It is the lowest level since 2017. Think about all the earnings growth since 2017 on the Mag 7. This is what Trump has been able to give us. The lowest Mag 7 forward PE that we've seen versus the S&P 493 since 2017. I mean, we have not got these levels in over 7 years at this point. So this type of volatility is being, I guess, welcomed by some people, but obviously other people hate it. And this is kind of the nature of where we're at right now in the current state of the markets. And CPI is good, but CPI is going to be one of those things that the administration has to tackle from a perspective of if they really want to see all this good news be good news versus bad news. Let's hear from Brad Gerstner. He is a longtime tech investor. He is a supporter of the Trump administration and supporter of Elon. Let's get his thoughts on what he's thinking is happening right now in the markets.
During this uniquely maybe uncertain time. So
Well, I mean,
ahead of this.
Well, we started the year. First, it's great to be here.
It's nice
I
to
even
see
put
you.
on a tie for you.
Thank you.
Got rid of the black T-shirt for the day. We started the year markets at an all-time high. We had seen a big Trump bump coming out of the November election. And when you listen just to the words of the president, we knew this was going to be a big period of transition, right? We were going from a period of 4 years of $2 trillion deficits, massive fiscal stimulus, massive monetary stimulus, and we're going to delever the economy, right? He talked very openly about the tariffs, more reciprocity, fairer trade, talked openly about the fact we're going to have some level of austerity with Doge, et cetera, that we'll get into today. Periods of uncertainty. We have high economic uncertainty, high political uncertainty, and high technological uncertainty.
And high multiples.
Right, at all-time high multiples. So there's only one thing that can happen. Discount rates have to go up, right? Risk premiums have to go up. And when they do, multiples come down. So for us, that was just a period to say, okay, we'll go to the sidelines. We'll wait this out a little bit. We've seen the markets come back in. And I have to tell you, we were buying some yesterday because now you see NVIDIA at 18 or 19 times next year's earnings. Now you're getting paid. You have a margin of safety. So here's the question,
though. Do you think that the
Which I agree. When you get these valuations to get as cheap as they've gotten, someone like Brad Gerstner, who's been in tech for a long time, I mean, he obviously gets excited. By the way, this is the chart I was looking for real quick. So in the first term, 2017, when Trump got elected, as you can see, the S&P 500 relatively started going up. I mean, maybe some small dips here and there, but 2017 was a great year. The second term, we are just going straight down. So that is the big difference between the first term and the second term.
The uncertainty, I would argue the uncertainty does not feel like it's over unless
Correct.
you think it is.
No, listen, the market now is firmly ensconced in understanding that we're in a period of uncertainty. So I think about the first 10% down, Andrew, which I think the NASDAQ troughed it down 14% yesterday from its peak, okay? The first 10% is just digesting the fact that there is more uncertainty. This week was the first week where I saw a banner on CNBC that says fears of recession. Mm-hmm. So the second 10% really is about growth and recession.
And where are you on that score?
So I think the handoff between these two policies, right, can be messy, and it could tip us in to growth concerns or recession. We heard Delta warn earlier this week. We heard cautionary comments out of Walmart. So I don't think we can, go slowly through this transition. I think the economy is fundamentally sound, but I think we need to get clarity around the tariffs, We need to get
Right.
clarity around taxes. We need to get clarity around reconciliation and Doge. I think the president's going to lead us in that
And are
direction.
you-
But just to clarify, you were speaking pretty publicly about this back in early February. I know you had a podcast where you talked about those
Correct.
things. Did you sell stocks when you say you stepped to the sidelines?
Yes.
So you
Yes.
sold a lot of the
Yes.
positions, and now you're starting to.
So we
look
took
at
down our
valuations.
gross exposure. So that's our longs
Right.
plus
Yeah.
our shorts. We took down our net exposures really to kind of the bottom decile of exposure that altimeter would normally have. Again, it's just in the too hard bucket, as Warren Buffett would say.
Yeah.
You know, it wasn't because we thought we were going to fall off a cliff, but we were concerned that this could be more messy than people thought. Because the magnitude of the change is bigger than
you
people
buy with
thought.
both hands in the NASDAQ? What is what you would think is, wow, this is dirt cheap? 20%, 25% from the
Off the peak?
Off the peak.
Oh, well, again, it's all,
I-
all fact and circumstance dependent. If we're heading in a positive direction fundamentally, which I think we are, right? I think we're heading in a pro-growth, lower regulation, fiscally more responsible direction.
On the other side of the
Right. And so when you're off 20%, to me, that's probably a huge buying opportunity. Because remember this, Joe, as of yesterday, the average stock in the Russell 3000 was down 30%.
Yeah.
The average stock. Most stocks in the NASDAQ I was looking at were down 20 to 40%. So yes, the index was only down 14 because of the Mag 7's weight in the
So
index.
timing is a dangerous game, but the question is, to the extent you think this continues to be messy,
Right.
how messy is it? How much more is
Right.
there? And to the extent there's some people who are sitting around going, you know what, the knife is falling, I'm going to let it
But the
continue
mess
to
could
fall.
be, the mess could be,
That's the opportunity.
Right.
but the markets bottom long before the mess stops.
Well, no, but
That's the problem.
that's
Yes.
Like during the
But you
pandemic.
said the next 10% would be from
Right, you're
growth
suggesting
concerns.
that there
So you think
is another 10%.
Well, listen, the future is a distribution of unknown probability. So there, of course, is a probability, right? There's a certain distribution
Right.
that we're going to go further down. And let me give you some scenarios and maybe a framework to guide how we're thinking. So first, the president said April 2nd is going to be a big day. Howard Lutnick has come on here and said April 2nd is going to be a big day. We're going to announce the reciprocity tariffs. So I think we have to wait and see. We have to wait and see what that is. Now, the question is that the start, Andrew, or the end?
Right.
Right? If that's just saying, we think the Europeans have $2 trillion of non-tariff trade barriers against the United States, and we're going to impose very high tariffs against the Europeans, then it's more like a start than an end.
And the Europeans are already making noise this morning to say that there would be reciprocal tariffs to our reciprocal tariffs.
Correct.
If that's what.
So I think, listen, on the tariffs issue itself, if you believe that we're heading in the direction, I see Peter Navarro come on here sometimes, I think he's great. But if you think we're heading in the direction of high structural, permanent McKinley-style tariffs, then we have further to go down. There's not a lot of support on
But
capital.
what do you think?
Right?
About that
So I don't.
question you're asking?
I fundamentally think that the president is negotiator in chief. He likes to keep all of us off balance. He likes to keep all of his negotiating counterparties off balance. I think it's probably a pretty effective negotiating technique. In order to do so, he has to make you believe that he might actually impose super high protectionist structural tariffs. But at his core, I think he's a free trader. At his core, I think he wants to make deals.
But here's the question from the timing perspective that at least I'm thinking about. Maybe I'm wrong about this. So we have April 2nd coming.
Yes.
And I don't know where. And if, by the way, if you're a negotiator in chief and you want leverage over people, the truth is you might actually continue that process
Correct.
for a longer period of
Correct.
time. Okay. Then you're going to hit the summer and we're going to have a big conversation in America about taxes
Correct.
and our budget. That will go through the end of this year.
Yes.
Okay. Again, more uncertainty because
I think that'll be done. No, he wants a bill on his desk by the end of May, the reconciliation package. Whether or not it gets there is a question. Could fade into June or July, but I don't think it's going to be the
So
end of the
when do you
year.
think that's all going to get resolved?
Well, I think we're going
Tax story in America.
My sense is that you got to take it as it comes. Price, the market's going to adjust along the way. But if you think there's a clearing event thus far, I don't see any clearing event, right? We're still in the land of the ambiguous. Every day, everybody's waking up in the morning to see what was said overnight. I think April 2nd will provide a little bit more clarity. I'm hopeful that May will give us what we need. I hope that's the clearing event. I hope we know at that point in time what reconciliation
April showers bring May flowers.
Exactly. But listen, The fact that everybody is operating on that framework probably tells me that's not how it's going to work, Joe.
Yeah.
To your point about
You're
the market
right.
gets ahead of these things,
Right.
it discounts it faster. And so a lot of this has gotten discounted in very quickly. I said on that podcast with my partner, Bill Gurley, BG2, in early February, I said, you know, my only surprise on February 4th was that the markets hadn't reacted.
Yeah.
Because they had said the words. Right, they had said the words very
But people
clearly.
didn't believe them.
Right,
Because
exactly.
everybody thought that Trump cared more about the stock market than he appears to care.
And I don't think anyone can blame themselves for not taking Trump at his word. I mean, universally, most people, even if you hate Trump, like you still were happy that we were rallying, and you probably weren't selling into the rally. I mean, you were probably just like, all right, we're really going to go up. Even if I despise Trump and his political aspirations, at least the stock market's going to go up. But it was very hard to get bearish when Trump got elected on the markets. But I guess that was the right strategy because he said tariffs were going to create volatility, and now we're in the midst of that volatility.
Exactly.
But then there's another question talking about the stock market, which is he may not care about it today, but as you get closer to the midterms, I imagine he's just going to care. Maybe he's not going to care. You tell me.
He cares about Congress, but he doesn't care about each person that as much as he cares about it. You know.
Well, listen, I honestly believe, you know, and I was in.
And this goes to when does he have to get all this resolved?
He'd like-
because
he'd
you
like
need
to
to
keep
set
both
things
houses,
up
but I
to
don't
start
think-
to work in the right way
can't.
if you believe the midterm.
He is not getting up every morning watching CNBC and adjusting policy based upon whether the futures are up or down that morning. I know there is a conventional wisdom that that's the case. I think this president went through a life-changing moment in Butler, Pennsylvania.
Yeah.
And I think he wants this term to be of consequence. I think he has beliefs that go back 30 or 40 years. You know, I had a CEO of a major company send me a video of the president from 2016 talking about tariffs. And he said, what's your reflection on this? I said, the man has been remarkably consistent for 30 years on this issue.
Can I ask you?
Right.
So we talk taxes. So 2017 becomes permanent. What's that? 4 trillion, something like that. You do the other tax cuts. I don't know how many of those actually go through the tips and Social Security.
Over time. $3 trillion for just about every one of them.
We're already on track for another $2 trillion deficit this year. Before any of that this year, he says he won't touch entitlements. Doge isn't going to take care of $37 trillion that we already have, and we're going to keep adding to it. What can he? I mean, that's a worse problem for me than tariffs long term.
Yeah, this president and his economic team, which is incredible, Kevin Hassett, Bessent, you know, the Commerce Secretary Howard, you know, he's got great advice around him, and they want to reduce the deficit during his term in office. Frankly, I think he would love to get. He said he would love to get to a balanced budget.
How?
But I certainly think we'll get to 2% of GDP under his term. Here's how I think we get there. Most of the tax cuts are extensions, Joe.
Yeah.
But I agree with you. Tax on tips, I think that's $80 billion. Taxes on overtime. You're not going to be able to do all of them at the scope, perhaps, that people are estimating.
But I don't think the CBOE has the extensions.
The CBO.
Sorry. Not the options. I don't think the CBO has those tax cuts as permanent in the numbers. That adds how much?
Well, I mean,
that's why they did it in 2017.
Correct. They're going to scale these to 7 to 10 years. But by the way,
they will.
In 7 to 10 years, these things are going to expire, and they're going to have to be reauthorized. And you just heard Ray Dalio say, you know, 7 to 8% debt to GDP is unsustainable. Everybody knows
we can get
that.
to 2?
I think we can get to 2% under
with growth.
And here's how we get there. I've tweeted about this. You can see the chart. Elon retweeted this chart. We were, if you just baseline 2019 federal spending, and in 2019, nobody on this set thought kids were starving in the streets or weren't being educated or we weren't spending enough as a federal government, right? We spent $4.5 trillion in 2019. Grow that at 3% a year. If you baseline that, we should be spending about $5.5 trillion this year. Instead, we spent $7 trillion last year. That is COVID stimulus. That is the Red Bull high that we all put ourselves on. So if you just went back to the 2019 baseline, you grew it to 2029, that's $6 trillion in spending. Okay, I think we can get the federal revenues to 6 to 6.5 trillion by 2029 by just growing 2.5%. So I think there is a reasonable shot at getting close to balance at $6.5 trillion in 2029, but you're not going to get the entire wish list.
I'm feeling good.
We've had people who have come in and said the wish list.
All right, we'll go back to that in a little bit. We got about 29 minutes until the market opens. I'm happy you guys are having fun in the chat, focusing on everything besides the stock market and your focus. You know, this reminds me of when I was in freaking elementary school. I had like a Justin Bieber haircut, believe it or not. I got to show you guys. I don't have any pictures on my phone, but maybe on Facebook I have some pictures. And like it really, I had like a Justin Bieber haircut and everyone called me Justin Bieber. But yeah, this is why I wear a hat every day, because you guys just would get too distracted. Anyway, markets are up. Robinhood up 6.4%, Bitcoin 84,000. Look, I agree with the majority of what Brad Gerstner said. The question is going to be if it's actually possible, right? If it's actually possible. And I don't think we know if what Gerstner said is going to end up working. The big problem with what he's saying is that it all is contingent on Doge actually being a thing and Doge working. And I think a lot of us right now are trying to figure out, is Doge going to work? Ray Dalio came out yesterday and he said that the debt to GDP ratio that we have is completely unsustainable. Now, Ray Dalio has been talking about this for a very long time, so this is not new for Dalio. But even he's getting to the point where it's just like, this is not going to work anymore if we have this type of debt to GDP, which is why I agree that Elon's got to do something. Is it going to hurt Tesla in the meantime? Yeah, I mean, it's pretty obvious that it's hurting Tesla in the meantime, and it's crushing shareholder value. But Ray Dalio says the U.S. is going to be completely screwed over the coming decade if we don't do anything with our debt crisis. And I think Elon's trying to do at least something. His goal is to reduce the deficit by about $1 trillion. We'll see if that can happen. But it's going to be very important for someone to do something, or we're going to have to grow out of it. And I mean, I don't know if we can grow out of it. Our GDP estimates already went down for Q1. AI would have to live up to the hype, like really live up to the hype. We would have to have productivity gains out the wazoo. And it's just like that stuff needs to happen for us to believe it. But one thing we can control is expenses. At least to an extent, we can start cutting. And I think that's what the market is trying to figure out, if they believe that the Fed is going to be able to, or at Doge, the White House, et cetera, this administration is going to be able to pull this off. The 10-year spiking right now is not good. Again, this is the real nuance of this stock market right now. Trump doesn't want the 10-year to go up. He wants this thing to collapse closer to like 3.5%. This type of a CPI report making stocks more attractive isn't really doing that. We're not getting the really bad economic data that we need to get this 10-year to collapse, aka recessionary data. We've gotten some pieces of bad data, but overall non-farm payrolls were good. Jobs data was good. JOLTS. Oh, by the way, we didn't get to talk about JOLTS yesterday because I was gone, but dude, what did you guys think of the JOLTS data? Because the JOLTS data came out and it was freaking more than expected. 7.74 million versus 7.71. So we actually beat on JOLTS, right? And it's one of those things where it's like, hold on. Okay, so for the people saying it's fake, here's my question. This is the same BLS that was part of the Biden administration and the Trump administration. I don't think anyone can call it fake. Because if you call the Biden administration's job numbers fake, are you calling the Trump administration's job numbers fake? And if it's all fake, then it's like is there any credibility to the idea that it's fake? Because now Trump's cooking the books as well, right? Like at some level, I think we have to agree that it's not fake in a reasonable way. Otherwise, then it's not. It wasn't Biden's quote unquote jobs. It's everyone's jobs. And if the BLS is saying, hey, these are the amount of jobs that are open, we have to agree with it. Otherwise, you think Trump's cooking the books as well. Like at that point, every president is cooking the books, and we can't just blame this on Biden. So, I mean, from that perspective, maybe you do think it's fake, and then Trump's cooking the books as well. But this doesn't make sense. We should not have these many jobs open if we are having this massive economic recession coming along the way. And I mean, I don't know. Like, even if it's January numbers, that doesn't matter. Like Trump started transitioning to get into office by end of November, early December. So, I mean, I guess we can wait another month and see if there's, but do you really think in February we're going to have a massive decline in jobs from January? And we're going to see like 5 million jobs open? Because the way Trump wants this 10-year to be acting is as if we are losing an incredible amount of jobs, and that's just not happening. That is absolutely not happening right now, which is why it's really hard to price in the recession. And that's why I think stocks are up right now, because after you got that jobs data yesterday, you got non-farm payrolls, and then you can see CPI coming to the downside. Yeah, why would you buy bonds? You'd probably be more excited to get NVIDIA trading at 24 times earnings. But it's not exactly what I think the administration wants. I think they wanted really crappy job data, even though they say they want good job data, to be able to get the Fed to cut. And that's not exactly what's happening right now. So I guess we'll wait till February. If everyone really wants to wait till February to say that the numbers aren't cooked, and maybe we get some dramatic drop off in February, and then you can say like, all right, Biden was cooking the numbers. But you can't have it both ways. If Biden was cooking it, I mean, Trump's cooking it too. If you don't believe these job numbers, and at some point we either believe them or we just believe everyone's cooking it. This is a S&P 500 index to inauguration day. As you can see, Obama's 2013, Trump 2017, Biden 2021. Markets did pretty damn well. And Trump 2025, it is 50 days after the inauguration, going the opposite direction. So again, another chart that kind of just basically makes the argument that these policies that the administration is focusing on just aren't the best ones for the broader market, even if it's good for the American economy. These are percentage below 52-week highs. I mean, these numbers are probably a little bit to the upside based on the momentum we're seeing this morning. But as you can see, S&P 500 down 9%. Yesterday we were down, or 2 days ago we were down 10%. That was official correction territory. Apple's 15%. The Russell IWM, talk about a horrible trade. Small caps have not done well. Down 18%. Microsoft down 18%. Meta down 18%. Amazon down 19%. Bitcoin 24%. Nvidia 29%. Palantir 39%. MicroStrategy 52%. Fartcoin 90%. Trumpcoin 80%. All of these down from their 52-week highs post-Trump being elected. It is pretty obvious some of these risk-on assets have not been met with the benefits of being risk-on, because the market right now currently doesn't seem to be as risk-on. How do we quantify that the market's not risk-on right now? Well, take a look at this. We talked about this moving average 2 days ago. We got yesterday's data now. Total U.S. put option volume just hit its highest level ever. Not in 2025, not in 2024, not over the past couple of years, ever in the history of put option volumes. This is on not just the S&P 500, but anything, right? If you buy puts on any stock, any individual index, whatever it may be, it's at its highest level ever. To me, this smells like ridiculous amounts of fear, and that fear may be unwarranted. But then again, that fear might be warranted because of this administration's paradoxical policies around how they kind of want bad news for it to be good news, but they also kind of want good news to be able to take credit for the good news, aka the labor market being good, but they kind of can't have the labor market be that good because they need the Fed to have a catalyst to cut. As a result, fear and greed is at 18. I think on Monday we were at 14. That's when it got really bad. Yesterday we spiked up because of the little bit of a rebound that we had. Today we'll see if the market can sustain its momentum. But overall, we are definitely seeing more and more fear that is meaningfully entering the market. Let's talk about Tesla. I am a little worried about Tesla going into Q1. And the reason I'm worried about Tesla going into Q1 is because although it was super cool to see Trump endorse Elon yesterday, it also felt like he had to do it because he knows Tesla's struggling. And the reason Tesla's struggling is because Elon's spending time at Doge. And it seems like he wanted to help pump up Tesla, which is why he did this yesterday. Like, this is super cool. I love it. I think it's awesome that Trump's embracing Elon when Biden wouldn't even say his name. But it's also like, all right, are you doing this to get your MAGA base to buy Teslas, which historically a MAGA, voter would not really want a Tesla just based on like statistical studies we've seen. Maybe they start to want to buy Teslas because of Trump, but it's also like, is he doing this at the behest of Elon, who's like, dude, like Tesla's losing a lot of value. I need some help here. And maybe that's why it's happening.
Well, I'm going to buy, and I'm going to buy because, number one, it's a great product, as good as it gets. And number two, because this man has devoted his energy and his life to doing this. I think he's been treated very unfairly by a very small group of people. And I just want people to know that you can't be penalized for being a patriot. And he's a great patriot. And he's also done an incredible job with Tesla. And I mean, nobody else has a car company started up in the last 30 years that's been successful. I don't think so. And not only successful, but super successful. And because he's able to find billions and billions and billions of dollars of fraud and waste and all of the things. I mean, our country is going to be very strong very soon because of a lot of the things that he's done and a lot of the things that I'm doing. And there's no better team, but there's no better for what we're doing. There's nobody like this, and he shouldn't be penalized. And when I watched the other day, I said, I can't believe it. It should be the opposite. People should be going wild, and they love the product, but because he's finding all sorts of terrible things that have taken place against our country, they want to penalize him in a economic sense. And I just think that's very unfair. So I just wanted to make a statement. I'm going to buy one. Now, here's the bad news. I'm not allowed to drive because I haven't driven a car in a long time, and I love to drive cars. But I'm going to have it at the White House, and I'm going to let my staff use it. I'm going to let people at the place use it. And they all are all excited about that. I'm not allowed to use it. Can you believe it?
Okay, so that was the endorsement we got from Trump yesterday. He had a Model S, a Cybertruck, all those cars sitting next to him. Now, look, the people that are saying this is cringe because the president is endorsing a car company, I think is not the right take. That's not the right take. You know why that's not the right take? Because take a look at this. This is Mr. Joe Biden, who was supporting what was this? This was a Jeep Wrangler hybrid in the White House. I think this was in 2022. So it's not the right take to be upset that Trump's supporting Elon with the car because you think it's like crony capitalism. I mean, Biden did the same thing. And if you're going to think that it's cringe for Trump to do it, you have to say it's cringe for Biden to do it. My take is not that Trump is like it's cringe because he's supporting Elon or he's doing a car. Like presidents have done this before for companies that, especially companies that are going to build their cars in America, which Elon committed to doubling the Tesla output of production in America. The reason I think it's cringe is because I think it's kind of this last resort that Tesla is using or Elon's using. In fact, my belief is that I think Elon asked him for it. I don't think Trump woke up one day and he was like, hey, Elon, you want me to do this? I think Elon went up to him and he was like, dude, I'm sacrificing a lot. I donated a lot to the campaign. Like, I need an endorsement. I need people who, like, the Democrats hate Elon so much. Not all Democrats, but we're seeing, the rise of Democrats just can't despise him, boycotting the Tesla, etc. Who's going to buy the cars? You need the MAGA base to buy the car. Now, the MAGA base historically has not bought a Tesla. Trump doesn't even like EVs. He's been on record many times saying he doesn't like EVs. And so this 180-degree flip that we're seeing right now, that's why it's cringe to me, because it seems like a desperate attempt to boost Tesla sales in a world in which Doge is obviously isolating a lot of people, or Elon's political ambitions are isolating a lot of people from buying the Tesla. So it's not cringe because he's endorsing a company. A bunch of administrations have done that. It's cringe because I think Tesla's struggling with their sales. And I think if you're buying the Tesla dip, or at least today, Tesla momentum right here, up 6% to 244, I really don't think the Q1 revenues are going to be good. I can't see a single catalyst. Energy is not the catalyst. FSD is not really happening yet. Margins are going to suck given their 0% APR financing. The Model Y is ramping up, but it's not going to be ramping up enough, in my opinion, to meaningfully make a dent in Q1. Now, maybe you could argue that sentiment is so bad because the stock is down literally 50% from the highs. The problem is, what if the stock never deserved to be at 480, right? Like, everyone's like, oh, well, Tesla's down 50% from the high. Same thing. I have the same consistency when I talk about Palantir. I don't think Palantir deserved to get to almost a $300 billion market cap at 125. So when I see the drawdown 30%, everyone wants to laugh at Palantir investors. Haha, it's down 30%. And in my head, I'm like, first of all, I as a Palantir bull probably didn't think it made sense to get up there. So the drawdown makes sense to me. Now, if we fall back to $40, I'm like, okay, that's where all right, we had some really serious multiple compression, but 125 to 80, it's just not that big of a deal. 480 to 230 is a pretty aggressive deal, but did it deserve to get to 480 in the first place? I think is the question. I mean, and by the way, it's not just Tesla. The S&P 500 lost its entire Trump bump. It went from 550 to 6,200 on from election day to February, I think 12th, around that mid-February time. We were at those levels. We're right back to where we were on November 5th, or before November 5th. So from that perspective, I just think buying the Tesla dip right here, if you're buying it, you got to be buying it long-term, because I don't think Q1 there's some massive catalyst, unless, Elon announces something that no one's thinking about, which he could, right? Tesla has been known to do that sometimes. They're a tech company. They can find different ways to be creative. But this one's going to be a little tough. Robinhood right here is up 7% in the pre-markets. The CPI bump is lasting, at least right now. We'll see if it opens with that same bump. If you're just joining, we got 2.8 on the headline versus 2.9 expected, 3.1 on the core versus 3.2 expected. So CPI came in pretty nice, which is what the market wanted to see. If you're buying at 320, you should be buying now. Nothing has changed. I would agree with this just from a pure buy the dip perspective, but I do think one thing has changed, and the one thing that has changed, which is what Dan Ives talked about yesterday. Well, let's listen to him. Is that the extent by which Elon has dedicated his time to Doge has shocked everybody, has surprised everybody. No one understood it was going to be this aggressive of a commitment, and neither did Dan Ives. Now, he's reiterating his 550 price target. He believes long-term Tesla will be fine, which I agree with as well. It's just in the short term, it's a question of how easy it'll be for Tesla to maintain these levels.
Called it a table pounder. Last night, you said your bullish view was unchanged. There are a lot of questions about the stock. It's been down 7 straight weeks. Why'd you feel compelled to come out and defend it not once but twice?
Yeah, I mean, well, first, I mean, we've been talking to investors, all around the world on Tesla, and is this a moment that basically the bull thesis basically gets thrown out because of some of the brand issues, the distractions? And our view is when things are great, okay, anyone could be there. But when things are tough, moments like this, I think that's where we've been able to guide Tesla investors over the decade, right? In terms of these moments. I don't believe that this is really a black swan event for Tesla in terms of the brand issues, in terms of something that could really deteriorate the medium and long-term outlook. But no doubt, we've talked about it. It's a moment of truth for Musk. No one, including ourselves, expected he'd be this involved in Doge, this involved in Trump administration, and it's really cascaded. And I think this is a pivotal moment for him.
Explain to me how you go from your bullish view unchanged, those are your words, last night, to this morning where you put out a note ahead of our appearance where you call it a moment of truth. What happened from last night to this morning where you didn't have that perspective until this morning? How does this happen?
I think from our perspective, it's more hearing Musk, hearing from investors around the world, and it's basically us saying the medium long-term case for Tesla, I continue to view $2 trillion. I believe when it comes to physical AI, autonomous robotics, they're actually the best position company in the world. But with that said, to hear Musk continue to talk, and again on social media as well, it's really us trying to explain, look, this is the time, very similar as we saw during Twitter, very similar as we saw even called a year and a half ago. This is the time to lead. It's a time to be CEO, because I think patience is wearing thin among investors, and it was really to communicate those thoughts at, I think, a pivotal time for the stock.
The reason why the stock is down seems to be a confluence of events. Obviously, his presence within the administration, as close as he has become, he's become a much more polarizing figure politically. But the facts are the facts. And the facts are that sales are not good. And they haven't been good. Are you taking that into consideration? Sales in China down for the past 5 consecutive months, right? Down 49% in February, the lowest monthly figure since July of 2022. US sales down again last month, down 75% in Europe, 65% in Australia. This has become more of a headline story to an actual fundamental breakdown somewhere.
Yeah, but let's also talk about what's ahead. In other words, the refresh from a Model Y perspective, when you look at a lot of the refreshes that are happening in Europe, in China, in the US, you got the unsupervised FSD in Austin. I continue to believe 90% of the value going forward is going to be autonomous, is going to be robotics when it comes to Optimus. And I believe from a demand perspective, especially when it comes to FSD, 15% of Tesla owners have FSD. That's what we estimate. As that goes to 40, 50%, I mean, numbers basically triple in terms of from an EPS perspective as that plays out. And look, I get it. This is a time. Have we been dead wrong this year in Tesla? Of course, it's been a disaster call. But for 25 years, our best calls are ultimately in times like this, that I believe as you navigate the noise, this will be not just a 1 trillion, but 2 trillion. But it comes down to Musk needs to balance Doge, Tesla CEO. That's something where I think the clock struck midnight.
So even Dan, who's one of the most bullish Tesla bulls out there, is saying, hey, We didn't expect Elon's commitment to Doge to be as aggressive as it's been. And as a result, you're having the volatility that we're having in Tesla right now. So look, long term, I think the thesis is well intact when it comes to FSD and robotics. It's just short term based on whatever entry price you want to get. There may be better opportunities than right now if Q1 really sucks. And it just depends on what the narrative is like going into Q1. Rocket Lab, real quick, we got a piece of news right here. They are partnering with Airbus to power next-gen OneWeb constellation for Eutelsat. Rocket Lab will provide 200 solar panels, inclusive of carbon composite panel substrate solar cells and photovoltaic assemblies. If I'm not wrong, and correct me in the chat, I believe Rocket Lab diluted by $500 million yesterday. They did an an at the market offering. And I thought, I was on the plane when I saw that news, and I thought Rocket Lab was going to tank. Rocket Lab didn't tank. I mean, they were fine. Stock's up right now pretty nicely on CPI and off that Airbus contract. They're up 8% right here. They were up 4% yesterday. So that was actually really encouraging news to me. Seeing a $500 million offering and Rocket Lab still didn't tank, to me means that the street is at least overlooking any level of dilution because they think their potential, especially around Neutron, is just so strong. I remember they diluted, I think, a year and a half ago, and they were down like 20%. And that's when the stock was like close to $4. I think they went down to $3.30 or something. So it's totally different. It's a totally different type of environment now. And the market is getting a lot more excited for the potential of this company. Yeah, they're using the money to acquire companies. Correct. They're using that $500 million to take some equity stakes. So Rocket Lab right here up 7.4%. We'll see if we can get back into that $20 range, but they've been depressed ever since the market pivot that we had a couple of weeks ago. From about $30 back down to 19. Nvidia is up 4%. Delta. So again, the Delta headline that we talked about in the market close a couple of days ago was that they are lowering their consumer guidance by 50% for Q1. All the airlines tanked on this. Delta had one of its worst days in 5 years yesterday, down 8%. I don't think that's something you ignore, especially when the index for airline fares went down in the CPI report we got this morning, probably because people aren't traveling so much. Some people said people are afraid of traveling because of all the different plane crashes that we're seeing. And I can't blame them. I mean, we are seeing a lot more videos and just headlines of planes like not landing properly and stuff. So I think there is some fear, but I don't think there's that much fear that people are just not traveling to the extent that the CPI reading is basically showing that they're not traveling, because the only reason airline fares would go down is because airline companies are reducing their prices in order to entice demand. And that demand seems to be coming off a little bit. So that could be a leading signal for lack of cruises, lack of vacations, lack of tourism, etc. And that's something I think we all have to pay attention to as we kind of try to assess what's going on in the context of the consumer. But we're going to see. That was Delta's guideline. We'll see what the other airlines say over the coming weeks as they have their Q1 earnings as well. By the way, this piece of news was pretty interesting to me yesterday. Remember that United Auto Workers Union president, the guy during the auto worker strike, you probably saw his face a lot. He was supporting Biden for the election. He's backing Trump's tariffs. This news yesterday was very interesting. He's arguing that levies will force companies to reinvest in the U.S. manufacturing and reverse decades of bad trade deals. In his words, corporations have been in a nonstop race to the bottom, slashing American jobs while chasing cheaper labor abroad. So you do have some people that you would think that were very hostile against Trump and the administration and in support of Biden that are actually for the tariffs. Now, again, the question is going to be how meaningful are the tariffs in relation to the economic meltdown that we're seeing, at least in the stock market. But you do have some people crossing the aisle and saying, actually, we like Trump pursuing tariffs. Here's someone who thinks the tariffs are absolutely a disaster. Here's the professor. We got about 5 minutes until the market opens.
Ukraine, if they hadn't come up, I think we would have had another 1,000-point drop day today. I mean, it's clearly this destructive, if I should say so, up and down trade policy that has really worried the market and sowed uncertainty among consumers and businesses. I hope that the Trump team sees what the stock market and, in fact, some early polling of some of this impact has, so that this policy can be rationalized. Because I think it is by far the major cause of the 10% decline that we've had over the last 6 weeks.
Professor, let's just entertain an issue here. What if the White House and the president, as you say, don't care as much about the stock market right now as people thought that they might, and that policy and getting their policies through are more important than whatever the stock market does? I ask you this question because the press secretary at the White House today during the briefing was asked about the sell-off, in which she said, quote, "We're in a period of economic transition after the mess created by Joe Biden." I also bring it up because the Treasury Secretary himself told this network just last week there's no Trump put. It seems like they're telegraphing to investors that the economy is going to get worse before it gets better, and the stock market may go down as a result, and so be it.
Well, I mean, this makes no sense to me economically, and no sense politically. I mean, so what are we saying? We're going to bring 100,000 manufacturing jobs back to the United States and tank the stock market by $20 trillion in the meantime? Do you think the people in Florida living off, the accumulated wealth that they've done in the last 10 years are going to be all excited about, some plant that Trump saves in Erie, Pennsylvania for 300 jobs or 500 jobs? By the way, producing something that they could have brought cheaper without the tariffs beforehand. I mean, it just doesn't make sense. I hear it, but then I think of the politics of it, and I think of the economics of it, and it just doesn't wash. Yeah, we do. I mean, there are unfair trade practices. We want to normalize some of these, but this grand vision, the cost parity is just nowhere near there. And the political parity does not speak anywhere in favor of the Republicans or for the American public. Don't forget, almost half the...
How many people agree with Jeremy? How many people agree that tariffs from a political perspective make no sense to save the manufacturing jobs in the United States?
American public own stock, if not directly, indirectly, through their 401ks, through their IRAs, through their pension funds. You have 180 million, 150 million people there. So, we're going to bring some manufacturing back to the U.S. How many jobs is that? Less than 0.1%. So they're going to get a little higher pay than they would otherwise. Where's the politics there, Scott? I don't see it. Maybe someone can tell me.
I mean, you got the professor who was pretty damn annoyed with these Trump policies, the flip-flopping on tariffs back and forth. I mean, literally at 10 a.m. yesterday, Trump tweeted that Canada would have 50% tariffs. By about 3:50, he then tweeted, "We're going to take away the 50% tariffs that originally were 25%. He was increasing them to 50%. So obviously there's been a lot of flip-flopping. I can understand the anger that he has from a political perspective to be able to bring back jobs to the United States. He doesn't believe in that whole short-term pain for long-term gain. Then you've got Trump saying, well, tariffs are going to be the biggest thing to transform the country. We're going to bring all the jobs back. I mean, you've got this grand vision from Trump versus the short-term pain of the stock market, and they're at odds with each other right now. And I guess we're going to have to see how this fully ends up playing out over the coming months. All right, folks, here we go. Wednesday, March 12th, 9:30 a.m. The stock market is once again open. We are back to the little bell here today. The little bell brought us a lot of green back in early February, so hopefully it's back to that. Wake your ass up. Tesla opens up 6.5%. 245 on Tesla, up 6.5. The S&P 500 is up 1.08%. SMCI is up 7.5%. Wow, Delta goes red. Look at that. Delta goes red. Huh. Delta, that's an interesting one. It's like slightly green right now, but it just opened red. Nvidia's up 5.4%. That's a big open for Nvidia. Delta's going back to being red. Grab is up 2.2%. Grab did not deserve to be $4 3 days ago. But then again, a lot of these stocks did not deserve to get these levels. So Grab having a little bit of a rebound right there, up 2%. TKO's up 1.2%. Robinhood's up 6.38%. Robinhood 38.66, just below that $39 level. Palantir up 6.2% as well, 83.09. Bitcoin just below 84. It hit 84.5 this morning on the CPI report, now at 83.4. So down about $1,000 from that level. Meta 630, that's up 4%. Google's up 2%, 166. Google was almost at 159 2 days ago at 161. So Google did get hit. Meta right here again at 630. Blocks up 1.4%. Target's up 0.48%. Costco, which was down 8% last Monday, is up 1%. Walmart's up 1.4%. S&P 500 up 1.2%. Tesla holding on to its green. Holding on to its green at 248. Actually holding on to its green. Everyone in the chat on the poll, 55% of you said yes, you trust the green from the CPI. About a minute into the market open, it seems like that green is holding up. We got a long day to go, but let's see how this plays out. SoFi trying to make its way back to $12. That's up 6.2%. Apple's down. Interesting. You would think Apple would rally with the market. No. Apple's getting sold off. Apple below 200 actually gets a little interesting, but Apple at 219, it is down from that 245 level it was at a couple of weeks ago. Southwest is up, JetBlue is up, United Airlines is up, Oracle is up. Oracle had a great earnings, didn't really pump on those earnings. I think they were down about 6% yesterday. They're up about 2% today. Archer, risk on asset, that's up 8%. Wow, Verizon, Coca-Cola, and Hershey's is down. All the value plays that were the only sea of green that we could find on Monday, along with Nike, are red. Where's Celsius? Celsius, I think it should be green. Celsius is red. That's why is Celsius being put in the bucket of Verizon and Hershey's? Like, Celsius is not a value stock. It's a growth stock. That is so weird that it's down on a day like this when CPI came in better than expected, but it was green 2 days ago. That's really weird. Realty Income, that one's down. Target is down. Berkshire Hathaway, let's see if I think Apple's probably taking that down. It's slightly up. Okay, so the other ones are keeping it up 0.21%. Rocket Lab's up 6.4%. Tesla up 6.7%. We got to see if Tesla can hold these levels. It was at 215 a couple days ago. So even if it closes at 230 today or 235, that would still be a big win from the levels of a couple days ago. Nvidia, its first 5% day in I think a couple of weeks, if I'm not wrong. Or maybe it was maybe it was only 1 week, but it's been a while, I think, since we've seen up 5.5% on Nvidia. Now it has to hold it throughout the end of the day. Grab's up 2%. S&P 500 again up 1.2%. Where's the NASDAQ? The Qs are up 2%. That's nice to see the Qs up 2%. Meta, Google, Amazon, Nvidia, Tesla, all are green. Apple's the only Mag 7 that's red. The only Mag 7 that's red. Celsius is a Pepsi proxy play. I agree, and Pepsi is a value stock, I guess, so that's why it could be going red. But Celsius is growing way more than Pepsi. Like, it's still a growth name, right? Pepsi right here down 3%. Or has Celsius completely lost all of its growth? I actually don't know their year-over-year growth rate. But I feel like it's still double digits. I don't think they're growing at like 3% like Pepsi. But I guess that's how the market is thinking of it. Tesla's still holding on to 248, dude. It's trying to get to 249. Like, it's actually not giving it up, which is pretty damn incredible. Same thing with Palantir. And Robinhood back to 39, up 7.2%. Robinhood's holding on as well. Palantir right here, 84, up 7.8%. I mean, these are pretty aggressive days. I know they've been sold off, but still, we haven't had 7 to 8% days on a lot of these names. Even PayPal's up 2% right here. So it's nice to see. VIX is the VIX is definitely getting hit. VIX is indeed down. I'm going to take a look at my portfolio because I haven't yet. Yeah, I'm up $31,450.15. You guys can put in the chat how much you're up today if you want, but Monday was down 6 figures, so we're recovering a little bit of those 6 figures. I mean, it's a pretty nice day. I still don't trust it yet. It's really hard to be like, well, everything's okay, especially because Nvidia right here, wow, up 6%. What's his name? Trump doesn't really want this. He wants inflation not inflation. He wants bond yields to come down. And right now the 10-year spiking because people are selling it to buy stocks. Like I don't know, dude. I don't think he loves seeing the stock market go up. I think, and he said this numerous times. He's literally said, like, we are not focused on the stock market. We are focused on interest rates. The stock market mooning is not good for interest rates coming down. There's no world in which that makes sense unless inflation dramatically takes a decline, which, today's reading was good, but it wasn't like, oh my God, inflation's falling off a cliff. Like that's just not happening yet. But it was a decrease month over month or sequentially, which is what we needed because we've had 5, if I'm not wrong, consecutive increases from September. So we really needed a U-turn on the inflation story, at least to the starting of a U-turn. And maybe today was the beginning of starting a U-turn. Low CPI is good for potential rate cuts. Yeah, but low CPI, we've got to get closer to 2%. 2.8, I still think is too aggressive for the Fed to even think of a cut. I thought the thesis was, hey, the Fed gets scared, there's going to be a recession, they'll get a cut. Not that CPIs. I mean, if by May we're still at 2.6, 2.7, I don't know if the Fed's that aggressive to be like, all right, it's time to cut. Especially if the labor market's holding itself. I mean, literally, fucking, what's his name? Jay Powell said his favorite Fed chair of all time is Paul Volcker. Paul Volcker didn't cut that easily. Paul Volcker was very headfast on making sure inflation was definitely gone. And I think Trump's trying to really get Jay Powell to feel the pressure, but I don't know if the CPI report's going to do it. Tesla right here, we did touch 249 for about a second, and then we got hit. We're going to have to see if we get there. Lowering the 10-year rate is the secondary objective. The primary is to push the Fed to cut faster and faster. Yes, but remember, the only way the Fed cuts outside of inflation coming down meaningfully is if the 10-year goes down, because the markets, or at least the bond market, has to price in a recession, which is why they would buy bonds. You don't buy bonds unless you think there's going to be some massive economic, at least slowdown. And that, I believe, is what the Trump administration was getting excited about over the past 2 weeks, because it was going to force Jay Powell's hand. But with this CPI report and with stocks doing well, it might not be the case. And if it's not the case, I think Trump, there's a world where Trump completely does a 180 on his tariff stance if he doesn't get the desired outcome, which is rates coming down, because then tariffs are just going to be fully inflationary. Like if rates don't come down and we still have tariffs, and it's not really bringing back that many jobs, or like it's just not going to be having any of the benefits he wants. The trade-off with tariffs is that we get rates to come down, which is ultimately what he cares about. But if that doesn't happen, really, what's the point of tariffs at that point? So it's going to be a really interesting scenario over the next coming months to see what happens. Apple is about to go green. There it goes. Apple goes green. So Apple finally catching up with the rest of the market. ELF is red today. TLT is red. All the stocks that were green a couple days ago, Enphase as well, they're red. Everything that Grindr is up 3%, Big Bear is up 8%, Trade Desk is up 2%, HIMS is up 6%, CleanSpark's up 4%. Where is MSTR? That should be up probably 5 to 6%. That one is up 2% today. It was up. I think it was up 7% yesterday. So that's at 265, up from about 230. And then Tesla looks like it wants 250. Tesla looks like it wants 250. My average on NVIDIA is 122.5. 122.5. Let me check some of the resistance levels on Tesla, Palantir, and Hood. So Tesla, I think it looks like it wants 250. Tesla right here, 249.38, $50. How much do we have to buy to get above that? 250 has, it's nothing. That's 50,000 shares. I think we'll crack 250. Yeah, it looks like we're going to crack 250. 250 is not going to be hard. This also looks like a little bit of a relief rally on Tesla, given how much pain it's been through. Also, they did. There you go. There's 250. Trump did give them a really big endorsement yesterday. That's better than Kim Kardashian endorsing Tesla, right? So that was nice to see. Hoodie is, let me check resistance for 40 on Hood. If Tesla's getting to 250, I think Hood could get to 40. Robinhood at 40, resistance is 17,000 shares. Yeah, that's nothing. And then Palantir, which is kind of broke through pretty much every major level today, 84. To get to 85 on Palantir, we need 10,000 shares. No, 67,000 shares. And then for NVIDIA, we are currently at 116, just quickly looking to 117. 117 would be about 60,000 shares as well. All of these names are holding on, bro. They're really holding on. Rocket Lab up 6%, S&P up 1.3, Tesla's up almost 9%, SMCI up 7, NVIDIA up 7. When's the last time we saw 7% on NVIDIA? It's been a while since that one. And then Palantir as well, up 8%. It's been a while since we've seen that as well. That's green. That's green. That's not too bad. Why is Google bearish? I think Google's a buy right now. I think Google's cheap. I know it's only up 1%. Look, I think the street is still afraid of this whole LLM search thing, which, by the way, is crazy because you know what's being discounted for Google? Waymo. Waymo. We talk about robo-taxis all the time. Waymo's officially launching in Silicon Valley, and they're already in Austin. I mean, Waymo, they're doing 200,000 paid rides a week. Waymo is killing it, bro. I've never been in a Waymo, so eventually I want to try it out and see what it looks like. But Waymo's expanding aggressively, and I think the market's completely discounting Waymo. Google owns a majority stake in them, but I think Google's one of the easiest Mag 7s to buy right now. I think in a year from now, Google's probably not going to be stuck at 167. Now, granted, I still like NVIDIA more just for the growth, but NVIDIA, if you're worried about the cyclicality, Google just feels safer. And I don't think LLMs are going to destroy the search business. Celsius down 3%. Berkshire is officially down 1%. Some of the value plays are getting hit there. S&P is at 1%. Tesla going for 251, baby. Look at that. We hit 251. We hit 251.69. There you go. Up 9% right there on Tesla. Are you buying Venture Global? I'm not. I don't know enough about them, but I know Chris posted that the insiders bought a ton of Venture Global yesterday. I think that's why it was up 11%. Again, this is in natural gas. If you care about that, the insiders bought 500,000 shares yesterday. 2 insiders bought 500,000 shares of VG. So again, I would look into the company. I think Chris and Matt did a pod on this on Cash Flow Chronicles, and you can listen to them talk about it in depth. I really don't know much about the company, so I haven't taken a position. But look, when insiders buy, it tends to be, for one reason. So, I mean, if they're buying, they are bullish, but that probably can't be the only reason you get excited for VG. Is Berkshire spending their cash? That's a good question. A lot of people thought yesterday Berkshire was calling a bottom potentially. They have no evidence for this. This was just a rumor floating around, and Berkshire was starting to buy. How ironic would it be if Berkshire gets in Tesla at an $800 billion market cap? And Buffett's like, yeah, we missed Tesla, but it's probably going to 10 trillion. So we're going to, I don't think that's ever going to happen, but it would be crazy if it was. But no, I don't know. Maybe Berkshire's buying, but what will they buy? Right? What has gotten cheap enough for Berkshire to be excited? Okay, put your top 3 stocks in the chat that you think Berkshire would buy that have gotten ridiculously oversold. I can name one. PayPal. I think that's such an obvious. I mean, they're buying back at this point almost 12% of the company. I don't know why PayPal's not dying. I feel like PayPal. I mean, I think Berkshire could easily take a strategic stake in PayPal. I think that's obvious. Another one, in my opinion, is Google. But again, Berkshire is not going to buy tech, so maybe I shouldn't say that one. Yeah, they're not going to buy tech, so that's probably the wrong one. Nubank, I know they trimmed their Nubank position, but Nubank has gotten significantly lower than where it was at the highs. I feel like if they re-enter Nubank and kind of double dipped here, that wouldn't be crazy. And then another one, believe it or not, I think is Uber. Now, I know the threat of Tesla FSD is out there. I get it. But if you think Tesla has some weakness short-term in terms of scaling FSD, Uber's still ridiculously cheap if you look at it on a price-to-free cash flow basis. It's cheaper. It's not as cheap as it was at 64 or 60 or 58. I think it got to the bottom in December. But it's still cheap. They just have a narrative issue qualitatively around FSD. But PayPal is my number one, dude. And Buffett loves financials. Like, he loves financials. So I really don't know why they wouldn't get excited about that. Domino's, I think they already have a little bit of Domino's. AMD, they don't do semis, so they wouldn't do semis. They wouldn't do Tesla. Oxy, I mean, at this point, he's just going to buy out the whole company if he does Oxy. And I mean, oil prices have fallen dramatically, so maybe this is the right time to get interested in oil. They're not going to do NVIDIA. They're not going to do SoFi. They're not going to do Meta. Like, I think realistically, I really think PayPal is not a crazy. I mean, you've got the buybacks, you have the growth, you have some level of product innovation, and you've got a cheap stock. It's not going to go to like 150 overnight, but I think PayPal to like $90 in the next year or 2 years. Like, even if it takes a couple years for it to get back to 90 or even like 85, I think this is one of those safe plays that Buffett would like, especially because he loves the buybacks. Why not Meta? Well, they just don't do tech, right? They just don't do tech. So Dollar General. Yeah, Dollar General got updated or upgraded the other day. I forgot the firm that upgraded them. 77.87. Was it JP Morgan? They put out like a $90 price target, I think, on DG. But yeah, they did get upgraded. I could see that happening, but if you think a recession's happening, then Bernstein said 90. Bernstein said gross margins are getting better and they're turning around their stores and they're reinvesting in their stores. The problem is if we have a recession and we have massive tariffs on China, I feel like Dollar General gets hit with Walmart, right? Like I don't know if those are easily able to withstand that. But my pick is PayPal, dude. I really do think it would be PayPal. But he's probably not going to buy PayPal because if he was going to buy it, he would have bought it by now. Robin at 39.14. That's up 7.6%. MicroStrategy is up 1.7. Robin trying to get to 40. There's only 70,000 shares separating it from 40, so there's a shot. Now, in terms of Robinhood, we didn't talk about their February metrics, so we got the February metrics yesterday. Grab, yeah. I mean, if he really wanted international exposure, I think Grab is. I mean, Grab got to $4 the other day. It just got stupid at some point, but I wouldn't hate if he took a stake in Grab. The Robinhood metrics were actually really good. The only problem is here. I mean, these were amazing metrics, right? I posted it on Twitter, 150,000 new accounts, 4.8 billion net deposits, 8.7 billion margin bounces, like just amazing metrics. The only problem is I think March is going to be weaker than February. So January and February are really good. Robinhood is getting set up to do at least 700 million in revenue for Q1, if not closer to 850. And if they have a decent March, I think they could crack 900 million again. It really depends on crypto volumes. But all of these were slightly down month over month, which is what we expected. February had the least amount of trading days, so they still put up really good numbers, even though there were only, I think, 15 or 17 trading days versus the 23 trading days. But March might not be the best. So although I think Robinhood's going to have a good Q1, if March doesn't have a rebound, and we're already almost halfway done through March, those metrics in March might not be as good, and then Q1 might not be as amazing. So my take on Robinhood is, yes, it's cheap right now if they can. Not even because they'll put up the growth if the market allows them to put up the growth. If the market, aka crypto, the S&P 500, etc., keep oscillating back and forth because of this tariff volatility, Robinhood just might not be able to put up the astronomical growth they put up in 2024. So that's my only concern with Hood right now. But I'm holding my options. I'm adding to my spreads. I'm keeping my spreads from last year. I'm going to have to sell the stock to pay some taxes. I'm going to have to sell at least 1,000 shares to be able to pay the taxes. I decided to sell the shares versus the spreads because the spreads are a 5x for me. If Hood stays above 20 by January 2026, I think it's pretty obvious Hood will be above 20 by January 2026. If not, then we've got a different issue. But outside of that, like I think Hood should be fine. I just don't know if we easily run back to 65. It really depends on the broader market. Kathy did sell out of SoFi. And she bought Hood, Palantir, and Tesla. I didn't understand her Palantir buy because she was selling Palantir at these levels 3 weeks ago. So I was really confused why she bought Palantir. Like if she was selling at this level, I don't know why she's buying in right now. Tesla, I understand why she's buying. Robinhood, she hasn't bought Robinhood in over 7 months. So she bought Robinhood for the first time in a while, about 300,000 shares. And she sold about 6 million shares of SoFi. SoFi right here up 4.4%. Completely liquidated her SoFi position. I don't understand why she sold SoFi either. It made no sense to me. No sense. Not at these levels. But yeah, she liquidated SoFi. Are we down? Is the market going down? Where's the S&P? The S&P is still green. We're holding on 0.7%, but there's a nice red candle right there. What time is it? 9:50. All right, kind of right on time. Nvidia's down from up 7% to up 5.8. Delta's actually down 3% today. This one is worrying me. I'm not going to lie. The Delta guidance is really concerning me, just in terms of what it means for the state of the consumer. I don't think we can ignore that as easily. But we need a little bit more confirmation from some of these other companies that report for Q1 guidance. But the Delta one was the first domino to say, all right, maybe the consumer is not as good. Nvidia right here up 5.8%. Lululemon is up a little bit. CRISPR's up a little bit. Palantir's up a little bit. So we got red candles across the board from the highs. We had the highs at what exact time? 84.42 on Palantir. That was at 9:42. So about 8 minutes ago. 8 minutes ago, everything hit the very, very top, at least so far for the day. Robinhood as well, falling right here. Trying to get some green candles, but we are going slightly red across the board. Did Trump just say something about tariffs? Hold on. Oh my God, dude. Is it because of what he said? Did he say something? I don't see a new post. Okay, I don't see a new post. Not yet. His last post was 8 hours ago. By the way, the debt ceiling bill passed through the House. Now we need to pass through the Senate in order to not get a shutdown in a couple days. So hopefully that happens. Yeah, he didn't tweet anything yet. I don't see any tweet. Okay, good. I don't see any tweet yet. We're just waiting for another freaking tariff tweet. Canada did get rid of 25% of their tariffs. Remember how they said they were going to put 25% tariffs on the electricity to Mexico, or not Mexico, to Michigan, New York, and freaking Minnesota? I think they reversed that stance yesterday night, which was nice to see. But still, the trade war between the United States and Canada continues to be aggressive. Robinhood 38.71, SoFi right there 11.80. Currently on the day. We have PPI tomorrow as well. Yes, we still have PPI. So that's going to be really important. And then after that, I think we have another jobs report on Thursday. And we're going to see. Yes, they are negotiating tomorrow. Lutnick is going to be meeting with the Canadian officials tomorrow. And they're going to be doing some further negotiation, which to me means that we're going to get a report. I mean, we're going to get something passed that is productive. Like, I really don't think Trump wants to put 50% tariffs on Canada. I hope not. Which, again, just goes back to this whole idea of, like, he's not serious about the tariffs. But the market doesn't know exactly when to react or not to react when it comes to the viability of these tariffs. Do you know what the Palantir teaser about March 13th is all about? Yes, we actually got confirmation about that yesterday. I'm happy you bring that up. AIPCon. AIPCon's happening tomorrow. So super cool for Palantir, their 6th AIPCon. They announced a bunch of new customers. Heineken. I didn't know Heineken was using Palantir. I'm more of a Corona Light guy, but Heineken is using Palantir. Walgreens, R1, RCM, Racetrack, Ripcord, and more. There's going to be over 100 organizations that are going to be there. It's going to be live streamed on Thursday. And you got a bunch of other customers: Anduril, AT&T, L3Harris, Delta, Red Cat, which is the drone company, Wendy's, KKR, Lennar, home building company, TWG. A lot of these names will be there for Palantir. By the way, I'm not a Corona Light guy. I was kidding. I think I've drank a Corona Light once in my life. I'm a Smirnoff Ice guy. I know a lot of you guys are going to clown me for that, but I'm a Smirnoff Ice. People don't give Smirnoff Ice enough credit, okay? Smirnoff Ice is the perfect drink to get a little buzzed, and it tastes like soda. But other than that, I can't. You know, one beer I do like, Guinness. I had Guinness beer before. Guinness beer. I like that. I've had that before. And I don't know. I like the taste. I think it's been a couple years since I had it, but the one time I did have it, I liked it. Smirnoff Ice, bro, or Mike's Hard Lemonade. Like, come on, bro. People try to hate on it. Are you still in high school? No, but like, Smirnoff Ice is Smirnoff Ice, dude. It's good. Does anyone like Heineken? That's a German brand, right? It's a German. You know, one time when I did go to Germany, hopefully I'll be back in Germany in the summer. But I went to Germany in 2016 when I was traveling on the USA debate team, and we had the World Championships in Stuttgart. At the freaking airport at 6:30 a.m., the bars were open and people were drinking. And I was like, what is going on, bro? Why are this is like, so the Germans, you guys drink. You guys definitely enjoy drinking. It's from the Netherlands. It's Dutch. Okay, never mind then. I thought it was Germany. It's a Dutch brand. Okay, wait, hold on. What's the main German brand for beer? What's like the go-to German beer? If it's not Heineken. I really thought it was Heineken, bro. I thought it was Heineken. Beck's. Okay, I've never seen Beck's before. Okay, I don't know any of the. But Budweiser's German. That's not German. Is it? No, that's American, right? Is it? I don't know. I should know this, dude. My dad had a liquor store growing up. I should know some of this stuff, but I don't. All right, markets are still getting hit. I mean, I shouldn't say we're getting hit. We're green. Nvidia's up 6%, but I think everyone's a little afraid if it can hold it, and it's holding it right now, kind of. Delta's puking, down 3%. S&P was up 1.2. Now that's up 0.6. Again, trying to hold it up from 552, but still down. Okay, a lot of the names you guys are saying in the chat, I cannot say them because I have no idea how to pronounce them, but I'll take your word for it. Pauliner. Okay, well, when I go to Germany in the summer, you guys have to introduce me to some of these beers or drinks. But the Germans definitely drink, dude. When I was at that airport, I was like, holy crap, dude. 7:30 or 6:30. And there was a lot of people at the bar too, bro. People were drinking. I was like, damn. I didn't know you guys drink this much. SoFi up 3. There's a nice red candle right there. 12.20 to 11.65. Robinhood as well. 39.67 to 38. A lot of these dips, I think, in MicroStrategy just went red. You just got to be careful with this stuff, dude. You just got to be careful because right now, Bitcoin from 84.5 to 82.6. I mean, it's the same story over and over again. And until that story reverses meaningfully, we're going to have to see if these dips actually end up getting bought. Budweiser got sold along with Anheuser-Busch to a German company for your brand. Okay. That makes more sense. How much do you believe the CPI report? I mean, I don't think I've ever doubted CPI. Well, people have doubted from the BLS has been the jobs numbers more than anything. I don't think people have ever actually really doubted CPI. I mean, look, people doubt CPI because they don't think the Fed's tracking the metrics as well. So they look at something like Trueflation, which is a better indicator of it. But as much as I love Trueflation, the Fed's never going to look at Trueflation. And by the way, Trueflation came in at 1.32%, down from 1.4. So like, the Fed's just never going to look at Trueflation. They're going to look at what the BLS says. The BLS, unless they change their methodology, is always going to have CPI basically 70% above what Trueflation says. And so the reason Trueflation's down today is because CPI came down on the headline and on the core. So Trueflation definitely came down, right? Because if the Fed's lagging data is down, then Trueflation should be down. But the Fed's going to really need to see below 2.5, I think, to get very excited. And we're not seeing it right now. And regardless of if you think CPI is rigged or not, I mean, that's the number, right? That's the number the Fed cares about. They're not going to change that number anytime soon. So we kind of have to deal with it. CrowdStrike back above 340. This one took a nasty hit a couple days ago around 315. So that one's at least getting a little bit of love. Uber's down. Expand Energy's up. CleanSpark is basically flat. Verizon, wow, down 5% today. This is the problem with rotating into value stocks because once growth comes back, value takes a nasty beating. Now, granted, if growth gets beat up later throughout the day, maybe Verizon reverses. But if you're looking for safety, that safety can get demolished if the market gets excited about being back into growth. And a good CPI report can get the market a little bit excited about that. Broadcom's up 4%. Again, they had a really good earnings. They're up from 175. Let's look at the rest of the semis. We did have some semi news today. Wow, everything's green. ASML, Broadcom, TSM, Marvell, ARM, Lam Research, Dell. Here's the semi news that we had this morning that was actually pretty good. And it's about forming a JV group to Sachin, thank you for being in the chat. Thanks for the well wishes. I'm feeling a lot better now. For Intel foundries to be run by Broadcom, AMD, and TSMC. So TSM, Taiwan Semi, they've announced or they've proposed a joint venture to NVIDIA, AMD, Broadcom, and Qualcomm to take stakes in NVIDIA's U.S. foundry operations, with TSM holding no more than 50%. This is part of that $100 billion U.S. announcement that they announced with Trump, and talks are currently in early stages, but some Intel executives, Reuters is reporting, is actually resisting this partnership together. I think this would be a cool partnership. I think this would give Intel some momentum after a couple months of really not having any momentum. And it would give a controlling stake, Intel right here up 6%, to the bigger tech companies in the semiconductor space that could probably retransform Intel into producing American chips in a more sophisticated way. Now, granted, Intel probably wants to compete with them. They don't want to give up control of ownership to these guys. But that is one thing that we might see with TSMC. And it's more bullish for NVIDIA. It's more bullish for NVIDIA. The Bank of Canada cut rates by 25 bips. Hold on. The Bank of Canada was scheduled to cut rates today? Didn't they just cut rates? I felt like they cut 2 weeks ago. Am I wrong on this? Was this like a month ago? Why do I feel like the Bank of Canada cut? I guess, well, they definitely cut last time. I don't know if it was a month ago or a couple weeks ago, but yeah, Bank of Canada cut to 2.75%. The United States is at 4.5%. So we are definitely above Canada. They cut by 25 bips, which is good. The United States is one of the only ones that's not really cutting aggressively. Oh, that was England. You're right. That was England. Japan raised by 25 bips 2 weeks ago. England is the one that cut. Okay, so we're getting cuts across the entire world. The U.S. is left, but I don't know how easily Jay Powell is going to be convinced, especially with this CPI report, to want to cut. S&P's up 0.5. Grab's getting hit, down 1.2. Grab's down. Is Nubank down as well? Nubank is slightly up, and then Mercado Libre is also slightly up. So the news on Grab today was that GoTo, their competitor, they said on an earnings call they would be likely to merge with Grab. Not likely to merge. They said they're open to the possibility of merging with Grab, which I think is good news. But I mean, we have to see how the markets interpret that. GoTo did also post their first EBITDA profitable quarter. Maybe that's why Grab's down, because one of their competitors had a good quarter. But they did say, hey, we're open to entertaining acquisition discussions. I think they've already started those discussions. I think that's why Grab has $6 billion in cash that they haven't deployed yet. But I guess over the coming months, we're going to see if that news actually goes anywhere. Canada cut rates due to tariffs. Well, that's definitely, yeah, I could see that as a catalyst. I mean, if tariffs are going to make things a lot more expensive, they probably need to stimulate the economy from that perspective. So that does make sense to me. Now, will the U.S. follow? I guess we're going to see, but it makes sense that Canada would take advantage of that. But then again, Canada also hasn't really had the impacts of tariffs because they're not fully live yet. And the tariffs they were going to, retaliatory tariffs they were going to put on yesterday, they canceled those by the end of the day. So we're going to have to see how aggressive it ends up becoming. Let's get an update right here from CNBC, and then we will keep going from there.
Stakes in a joint venture to operate Intel's factories. Taiwan Semi reportedly proposing to run the operations of Intel's foundry division, which makes chips for customers, but it would own more than 50%. Those shares up about 6% right now. Morgan Stanley cutting its price target on Apple to $252 a share from $275, saying the delayed AI Siri update means Apple will have fewer features to fuel iPhone upgrade rates. Those shares about flat right now. And Tesla shares trying to rebound for a second day. Oh, there you go. Up 7.3%, very much rebounding, but still on pace for losses on the week and hovering right around 50% off of their 52-week highs.
Meantime, as we said, stocks trying to rebound after we fell into correction tour yesterday on yesterday's trade. Mike, what are you watching? Yeah. And are there either positioning flows or sentiment metrics that are driving the conversation right now?
They've been in the neighborhood for a few days of good enough, usually to get an oversold bounce, but not too much more compelling than that. I think the CPI number, which was a bit lighter than anticipated, was at least one fewer thing piled up on the pile of negatives, and it cleared the way for at least a reflex rally attempt. It seems as if the market's acting like the urgent selling has dried up down at these levels. You get down to a 10% pullback, 10% correction, and it's at least a moment to stop and say, if it's going to get much worse than this very soon, you probably have to see a little more tangible evidence of outright economic weakness, of financial conditions tightening a lot more elsewhere. Credit's not really acting up too much. So I think that's the situation we're in. I'll channel the late, great Art Cashin, which he used to say, after you've had one of these sharp gut checks, it's like a cardiac event, and what the person who's experienced it does is they're constantly checking their pulse. They're constantly sort of aware of all the little micro sensitivities that you might have, and that's where we are right now. So I think the gnomes that I look at, say 56.25 on the S&P, could be significant. It's one of the waypoints that you would want to hit and close above that and say, okay, maybe that means that in fact.
Wow, all the airlines are getting hit. United's down as well. I didn't even notice that. So Delta took a hit. United's taking a hit of 5%. Southwest is down 2%, and then American Airlines is down 3.62. I don't know. It's kind of hard for tech to be green, and that's why we're seeing a little bit of a well, not a little bit, but definitely stronger red candles across tech, while some of these consumer names are turning red even on a good CPI.
You can have a fuller bounce. Any initial rally is going to be suspect at this point. And obviously it's going to be headline dependent. But Leslie, I'll say it again. If this was all and mostly about tariffs every day, different stocks would be leading us down. It's just not that. It's just not like GM and Ford going down every day. It's obviously one of the things that's weighing on the macro outlook, but it's not necessarily just that.
Well, it's all related to this unwind, which we'll go into greater detail later in the hour. But it's this idea that there was a crowding effect into certain names, things that were seen as beneficiaries, really, of the Trump trade. And then the reversal of that when the headlines went out of favor, when there were filings that revealed that a lot of funds were in the same positions to a similar magnitude, leverage was high, everybody sold out. And then you kind of had this rush for the exit over the course of a few days. Now, the question is whether that capitulation is done, if there's more wood to chop there. Gross leverage is still pretty high. Some of that could be just the dynamic by which they calculate it relative to kind of what equities have done, how people have sold out of their positions, and how people have taken on additional short exposure in light of all the uncertainty.
By the way,
out there.
the losers right here we're talking about on the Dow and even the S&P, it's the defensive stuff. So yes, the indexes look like they've just like this. Yeah, exactly. They did that. Bounce is dissipated. Yesterday it was kind of Mag 7 growthy, hard hit stuff that was rallying. If you could put together 2 days, it ratifies the idea that okay, that forced selling momentum stampede out maybe has abated to some degree. So we'll see if that works. All right, fresh inflation data coming in better than expected this morning, as we were mentioning. Steve Leisman.
Okay, so this is really interesting right now. We've got red candles that are continuing to be red. There's some green that's fighting for it. So Robinhood at 38.63 down from 39.67. The Qs at 4.79. They were at 4.81 on the day. Again, the airlines going red. It's hard to trust tech going green with the airlines going red because the airlines are more of a question of the consumer more than anything. And I don't know if tech can stay green if the consumer's getting hit. Where's Best Buy? I think they have earnings coming. No, they had earnings already, right? If I'm not wrong. Best Buy, they are red as well. I think I read a little bit of their earnings the other day. I'm going to go through it again today, but from my understanding, their Q1 guidance was also slightly lower than what was expected for Best Buy. And that is in line with what we heard from Walmart as well. So, yeah, could these be leading indicators? I think so. I think it's potential. I mean, seeing that CPI decline on airline fares to me was just like it confirmed what Delta was saying. Anecdotally, my flight had an open row, and I'm making fun of it that that means demand was down, but like maybe there's some truth to that. I've not had an open row in a long time on a flight. I've been on at least 15 flights over the past year. So I was shocked. I was very surprised. Like, wow, I have an open row. But maybe it's emblematic of some of the demand going down. United right there down 5%, Southwest down 2.5%, American Airlines down 3.61%. Here, all the big growth names are still green. Palantir, Tesla, Hood. Where's Tesla? We are still up 8% on Tesla, bro. I mean, like if I had to give one reason to Tesla outside of CPI, I honestly do think it's that Trump endorsement yesterday. I mean, I don't know how much that's going to get MAGA types of people to buy Tesla, because historically they've been the people to not get that excited for Teslas. But maybe you see Trump chilling in a freaking Model S. Yeah, I could see some of his base like start to get interested in Tesla. Trump got in the car yesterday. He was like, wow, it's all computers, right? And it's like, imagine when some of these people start experiencing FSD, if they ever get a chance to experience it. I mean, this is a base of people that probably never would have even gone to a Tesla dealership. I know they're not called dealerships, but a Tesla store. And maybe now they get more excited to check it out because of Trump. By the way, egg prices are down. Egg prices have lost about $1 per dozen. They're still aggressively high. They're up 58% year over year, but they are down over the past month. Which is nice to see. Is this because of Trump? Is this because of natural? I guess we're going to find out over the coming months if this trend continues to be what it is. But at least we do have some of that starting to go down as well.
Here with the breakdown and more on why recession fears are growing on the street. Hey, Steve.
Hey, good morning, Mike. Yeah, the better than expected CPI this morning, offering the best possible setup you could think of for a series of price hikes that could be coming into the system from tariffs. It's a better starting place for the Fed and its ability to cut rates if there's economic weakness and it's needed. Headline 0.2, better than the 0.5 we had last month, a tenth better than the estimate. Core 0.2, that's half of what it was. And you can see what's happened. The year-over-year rate has come down, but perhaps not where it needs to be for the Fed to feel super comfortable about cutting that 3.1% on core, probably a half a point higher than it would be in the PCE. Meat, poultry, fish, and eggs, that was 1.6%. That was a reason for the increase. Energy services, used cars and trucks also higher, but you got some relief on gas. And airline fares was probably the biggest reason for the number coming in below expectation, but that doesn't feed in to the PCE number. Economists at Raymond James writing, quote, there will be some inflationary impact from tariffs, but it is still not showing in the overall numbers. However, even if tariffs impact inflation, the underlying disinflationary trend remains intact. That's important. The outlook for inflation in the months ahead and how the Fed might react, that's one of the uncertainties markets are dealing with. It has some concern about recession. The recent failure of old recession guides means forecasters flying somewhat blind. You can see there the inverted yield curve and the sawmill didn't work. Recession predictions under Biden ended up being wrong most of the time. Or all of the time, actually. Tariffs look like they will have the biggest effect on the supply side, and it's rare for that to be a source of recession. Paul McCulley, economist, says almost by definition, a recession is driven by the demand side of the economy, which gives you the...
Oh, hold on. We got another tariff headline. Hold on. Is this real? Oh, my goodness, dude. Canada is imposing 25% retaliatory tariffs on $21 billion worth of U.S. goods. This comes just 10 hours after 25% tariffs on Canadian steel and aluminum went live. This actually shouldn't be that surprising because we did get the aluminum and steel tariffs, I think, at 12 a.m. last night, or technically this morning. So this actually shouldn't be that surprising. I wonder if the markets actually take this and get upset about it because we probably knew that was happening. Got some red candles. This literally broke 1 minute ago, at least on CNBC. But I think we knew this was coming. This one, we knew it was coming because the aluminum, Trump's backed off on a lot of tariffs from Canada, but aluminum and steel, he has not backed off on. And so that one I think was a bit more obvious. Seeing some red candles, nothing crazy. S&P is still holding on to 0.5% up. There's that red candle right there from 562 to 559. Yeah, I don't think this one is going to be that different. This is wild, bro. This is wild. Every single day, it's back and forth headlines around tariffs. I mean, the one thing you can say about the Biden administration is that there were barely any headlines. He didn't talk about anything ever. And so there weren't ever headlines. And so the markets were kind of just like, all right, we don't know what's going on in the White House, but we're just going to focus on earnings. And now it's like the market can't not react to a lot of this stuff because it's happening in real time. And we're seeing it pretty much every day. Scarlett says, why Canada and why not China? Well, I think, a lot of people have been asking this question. Why are we not posing it meaningfully on China? And we are putting, I think, 10% tariffs on China. I don't know what the logic is behind the Canadian ones. I mean, Trump says that, Canada tariffs us with dairy and all this other stuff. So to Trump, this is just a way to fight back against Canada. I think he's trying to get leverage here. I mean, there's this off chance he's trying to get Canada to be the 51st state, which I hate seeing that theory because it's not happening. And so he tweeted about it yesterday again. It's like, well, if Canada just became the 51st state, they wouldn't have to deal with this. It's like, that's not happening. Canada is not giving up their sovereignty to join the United States. So I don't know. I think he's trying to strong arm Canada right here and really prove a point. But at what point is that point going to actually be proved? Let's finish up with Brad Gerstner. We were listening to him a little bit in the morning. Again, he is a proponent of these tariffs, and he does think there are some good long-term effects. And then we'll keep going from there.
This is very expensive.
Yes.
President Trump says promises made, promises delivered. He plans on coming through with that. And that's why the tariffs are very important because they see that as a form of revenue. Navarro has said that. Others have said that.
Yes,
and that is
Scott's,
McKinley style.
But I was going to say, Besson said that the tariffs would not be included in whatever budget is going to be planned.
In the math that they go
Well,
through.
I mean, ultimately, the revenue is the revenue, right? Of course, the revenue of the federal government is going to be included in the P&L of the federal government. So, the budget forecast may not include because they don't have visibility right? But ultimately, it will be the revenue.
We asked the question very explicitly.
Yeah.
That's for this year passing.
But let's talk real quickly about tariff revenue. Last year, tariff revenue was $56 billion to the federal treasury. Okay. So the question is, where's it going, Becky? If you think we're going to $1 trillion and we're going to replace the income tax with the External Revenue Service, and we're going back to McKinley style where it was 90% of federal revenues, right? It would require a shock to the global economic system of massive proportions. I just don't think there's support for it among the business roundtable CEOs who are in Washington today. There's not support for it on Capitol Hill. But what there is support for is this president getting fairer trade deals with our partners and using this in this moment to get better deals. Now, what would that mean? I think we could take tariff revenue from $56 billion to $100 or $150 billion, right, over the course of these negotiations. You know, something closer to 10% across the board. But right now, it's unknown. He's in the middle of the negotiation. We have to let him negotiate. And if you don't like the turmoil, you got to step to the side.
Who pays the tariffs? Because this morning we already had our reporter in Beijing, Eunice Yoon, talking about how Walmart has been saying to the suppliers, trying to pressure the Chinese suppliers to pick up on some of this. And China's government is basically now saying, forget it.
Sure.
Don't come looking to us for those tariffs.
Sure.
If we end up paying them as American consumers, tariffs are tax, right?
Sure, absolutely, which is why I said we can sustain $50 billion or 75 or $100 billion more, but not $1 trillion more. That would be massive austerity and a massive tax. But, you know, economic theory, we know producers, particularly in China, will absorb a lot of this tariff increase. But we also know that a bunch of this stuff is going to be passed on. So let me give you one example. Canada and Mexico versus China.
Right.
In China, it's an export economy. The producers have no choice but to absorb a lot of the price increase. But in Mexico, if you're assembling an AI server in Mexico with parts that you procured from Asia, right, there's no way you can absorb that price increase. And so those price increases are already going into effect, right? The price of computers are already going up in the United States as a result of this. So I think when you look at Canada and Mexico, I certainly hope, and I think a lot of people share this view, we need to get their action on the border. I mean, listen, credit where credit is due, right? On the issue of immigration, we were told for 3 years that we needed a statute before anything could be done to slow the flood of people across the southern border. Totally untrue, right? And we're back to 20-year lows. So we have gotten a lot of action. I do think it's having an impact on the fentanyl labs in Mexico and Canada. But the reality is those are positive externalities of this negotiation. These are our trading partners. We need to get fair reciprocity from Canada and Mexico and then be done with it and get back to business.
Let me ask.
See, the problem is no one knows how that's going to happen, when that's going to happen, if that's going to happen, and what exactly is quote unquote fair reciprocity. No one knows that. And as a result, that's why we're seeing some red candles. Nvidia down from 117 to 114, Tesla 251 to 246, SoFi 12 to 1150, Hoodie 39 to 37. It is really hard to trust any of these rallies, quote unquote rallies, more like kind of swings to the upside, because they either get a headline or people sell into that strength, or the algos take it back down as we get more news about tariffs. Palantir right here, 81.80 as well, up 4.8% right now. Yeah, dude, it's the same thing every single day. It's not really changing. Like it's the same narrative every day. And it's been almost 4 weeks now of just up and down intraday, ending down, the next day going up a little bit, then coming back down, then getting a nice recovery so that we're not as low as we were before. Like Tesla doesn't go below 200. It's back above 230, now at 247. But then in another couple of days, we're back at 220. Like it's almost comical how easily it's happening. But it's almost like you want it to kind of either get flushed out and like straight up like, all right, let's go down, let's get it over with so we can start recovering, or let's pick a direction to the upside. But that's not what's happening here. That's not what's happening at all. Amazon was at 192 the other day. Now it's at 198. Meta 622 was at 604, down from 740. And then Google right here, 164, up from 161, but down from 190 a couple weeks ago. Yeah, it's the same thing, dude. It's the same thing every single time. Did Trump tweet again? Let me make sure. I don't think we got a Trump tweet yet. And this, we haven't even talked about the EU, bro. We've been talking about Canada, Mexico, and China, but Trump wants to do a bunch of stuff in the EU. Trump just said, wow, people are loving Elon, a great patriot. Nice to see. Okay, so at least it's not tariff stuff. At least it's not tariff stuff, bro. I don't know, dude. This is this is gonna be a pretty freaking wild next couple years in this market. Here's a clip from Trump yesterday talking about why he thinks the markets, or at least the economy, is going to do very well.
What do you think of it, Margot? Do you like the idea?
I love it.
Okay, good.
We're gonna have fun.
They're very happy.
Mr. President, your comments the other day not ruling out a potential recession seemed to rattle the stock markets. The Commerce Secretary said there wouldn't be one.
Just so you know.
Just specifically on the recession.
Yeah.
Do you
I
think
this
there will be a
country-
recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
So the easy way or the hard way basically means either I can be putting us through this tariff volatility to get to Trump's desired result, which is an overall booming economy, or he just continues to unleash the money printer. And obviously he's going the hard way here. We've all kind of felt that he's going the hard way. But it is yet to be known if that hard way is actually going to pay off in any meaningful type of way. I don't know, dude. We're gonna have to see. We're gonna have to see. Here was Ron Barron yesterday as well, talking about Tesla. He continues. Last time Ron Barron was on CNBC talking about Tesla, Tesla was at 170, went all the way up to 480 after that. So we'll see if that has the same impact at all. But he continues to believe that the robotaxi network is going to be the biggest cash cow for Tesla.
The fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you're going to robo cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1,000,008 cars. Now all of a sudden you're keeping the cars and making them robo taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles. They generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year. Anyway, the fundamentals are changing.
It's the same analysis that Kathy Wood's been given, right? Which is this idea of, okay, if Tesla does get the cost per mile to be significantly lower than Uber, Lyft, Waymo, etc., they will have demand that explodes. I mean, I agree with that. Like, in theory, that makes sense. I think in practicality, we have to see, can they get that cost per mile to come down? Is FSD going to be successful in that launch in June when they officially unveil robotaxi in Texas? And then I think we'll have some comparable stats to look at. Right now, it's just all theory. That's why June's going to be really important. And that's 2 months after Q1 ends. So that's in the middle of Q2. That Austin launch is going to be really important, bro. If that Austin launch doesn't really at least begin to show signs of this robotaxi vision that Elon's been preaching about for the past 15 years, then I think we're going to have some issues. But that one is definitely going to be important. Robinhood just had a price cut by Deutsche Bank. Let me see if I can find that. I would not be surprised to see the analysts start cutting their targets on Hood if they think growth is going to slow down in the broader economy. It's kind of normal to see them do that. And again, they're not necessarily wrong. I think Robinhood's going to be fine long term, but in the short term, yeah, volatility could get them hit. Yeah, they lowered it from 75 to 61. They said their February metrics were good. It reduced they're lowering it on crypto transaction volumes and a de-risking from the macro backdrop. That's why Robinhood got the downgrade today from 75 to 61 from Deutsche Bank, which again is fair. If we get a nice August 5th type of V-shaped recovery and markets go boom again, then I think Hood's going to be a main beneficiary. But if we stay flat or keep oscillating back and forth, yeah, it's definitely going to be a little tough for Hood to get back to those highs. So it's going to take some time for us to see how or when this ends up playing out. Okay, what else? What other headlines do we have right now? So we talked about CPI. That was kind of the main headline this morning. Bloomberg says Putin is likely to eventually agree to a truce, but with his own terms. That is another story that we're going to have to see play out over the coming weeks. Trump will be in Saudi Arabia later this week as well with Ukraine and Zelensky, and they'll be negotiating. It does seem like the minerals deal will be signed, which is going to be good. But what does that mean for Russia? Do they come to the table? I think we're going to have to end up finding out. I think we have the news and the tariffs right here. So let me pull this up right now.
EU overnight announcing some retaliatory tariffs. And then just in the last few minutes, Canada now saying they will be putting 25% tariffs starting tomorrow on about $20 billion in U.S. exports. They say they'll mostly be targeting steel and aluminum, but they're also going to hit some other U.S. imports. They say that'll include computers, sports equipment, and cast iron products, just as some examples. So expect more details to come from Canada. And I would also expect more retaliatory announcements to come today, guys, as other countries start to digest this move. Because remember, this hits everybody across the world. So we do expect to see more retaliation. And now getting back to where Steve left off, this is the rare policy move where we have a pretty good idea of what the economic impact will be, because we saw this happen in President Trump's first term when he first imposed these tariffs on most, at the time, steel and aluminum imports. That was back in 2018. He then later carved out a handful of countries, in part because of the economic impact that we saw. The upshot at the time was that there was some modest help for domestic steel and aluminum producers, but all steel and aluminum users were hurt. And as Steve was saying, since that's a far larger subset of the economy, the net impact overall was a negative one. So just to put a couple of numbers behind it, some research from the Federal Reserve, it found that the tariffs boosted employment in manufacturing by about 0.3%. That's how much it helped producers. But the rising input costs then dragged down the same sector's employment in manufacturing by a little over 1%. Retaliation pulled it down another 0.7%. So then on net, the impact was about a 1.4% hit to manufacturing. The Council on Foreign Relations says that was a direct loss of about 75,000 manufacturing jobs. And to put it more simply, economists at the Peterson Institute estimated there was a cost to consumers of about $900,000 for every one job saved or created in the steel industry. And remember, guys, those tariffs impacted only a fraction of the steel and aluminum imports that are seeing new duties today. So we can expect that impact to only multiply now that it's a bigger move. Guys.
Megan, it felt like in Trump 1.0 that the tariff policy was really solving for what you just laid out: job preservation of manufacturing. This time it feels a lot more muddied. It feels like, one day it's about fentanyl, one day it's about, making sure that U.S. manufacturing remains competitive and jobs are saved. What are you hearing in Washington in terms of the priorities that they're looking for? Because that confusion makes it difficult to assess, what exactly is going to happen next. If the fentanyl issue gets solved, then are tariffs going away? Or if the manufacturing preservation, if they find workarounds, does that go away? But without really knowing what they're solving for, it makes it kind of challenging.
Absolutely. You are hitting on what I hear the most about from industry, from companies, from consumers, is that it's not clear what the goal is with these. And because of that, people don't know how to react. They don't know what the overarching priorities are. You're absolutely right. First, it was fentanyl. These tariffs are about national security. The reciprocal tariffs are about fairness and a level playing field, and maybe the trade deficit, and maybe just some longstanding gripes with the EU and with Canada particularly. Those are the ones we hear the most, where the president seems to have some personal frictions or some personal gripes, I would say. So what I hear from the White House is that it shifts almost every time that you talk to them. They're focused on the same pool of things that you and I have now both mentioned, but they're not always leaning on just one. Remember, a few weeks ago, they said they were never going to take the Canada and Mexico tariffs off until there were zero fentanyl deaths in the U.S. Obviously, we didn't get to that point. Then they said they talked to the car companies. They didn't want to hurt them. That's how they removed about half of those. So we just don't know. And you're right that industry does not like that they're using tariffs to try to solve for non-economic issues. We will have to see how that develops.
Oh boy, we continue to have this tariff. I don't even know what to call it, but I guess volatility is the best word, going back and forth. I don't think the administration has a plan right now. I think they kind of have a plan, but the plan changes every other day. And that's why it's kind of hard to keep up with markets and for stocks to pick one direction to go up or down. I do think we still end up green for the day. I mean, we'll see as we end out the day in a few hours, but we are green right now. We're holding on to the green. It's not as green as it was an hour ago, and maybe it's not going to be as green as it is right now. But based on the day we had on Monday, which I don't know if I want to say that's the bottom, but it was definitely a hell of a day where a lot of bottom indicators started going off. Maybe we get a little bit of a rebound, but it is purely going to depend at this point on the headlines that come from these tariffs. All right, that is it for me on the show, guys. I have to leave a little bit early today. I am doing something today that I can't say yet. Tomorrow you will find out where I'm at and what I'm doing. That's why I can't say currently what state I'm in either, but you guys will find out. And what was I going to say? I'm not going to do the market close today because I'm going to be gone the whole day. There's a very low probability that I'll be doing the market close today, but we will have the market open tomorrow. A couple super chats real quick. Kenneth, first of all, thank you for becoming a channel member. Appreciate it. Bucket List Guy, thank you for the $5 super chat. Tuned into the Megamind morning report. LOL, feel better soon a bit. I hope even in the midst of this market volatility, at least you got some laughs from looking at my hair this morning. There were very, very friendly comments in the chat. So if you're going to be a content creator, you better have a thick skin, bro. You better have a thick freaking skin. Warren, thank you for these 670 Taiwanese dollars. Can you give us some SMCI advice? My only thing on SMCI, which has been the same for a very long time, is that you have to be able to trust them. Now that they filed the 10K, you can trust them. I think it's really cheap at these levels. I'm not buying it because I'd rather buy NVIDIA. But if you're heavy SMCI, you got to wait till the semis come back. And once the semis come back, once NVIDIA comes back, you'll have a better chance for SMCI to come back. But the fear that they were a fraud company has gone away, at least to an extent, given they filed the 10K. So now if you're in it, you kind of just hold on to it. And that's what Steve's doing. He's just holding on. He likes SMCI, likes NVIDIA together, likes that kind of semis theme. And you got to wait for this tariff volatility to go away for the semis to come back as well. You guys are saying AIPCon? I don't know. I guess we'll find out tomorrow. Who knows? Who knows? Maybe, maybe not. I can't officially say anything, but I guess we'll find out tomorrow. All right, what's word of the day? Let's do word of the day. Dude, I really did not want to miss the show yesterday, bro. We had so much news. We had Jolt happening yesterday. Like, I really hated missing the show. Again, I was talking about this in the morning today, but I really value consistency. I think it's so hard in life to be consistent at anything. And like, once you get consistent at something, you want to like actually, be consistent. Been consistent for basically 2.5 years on the show. I don't think I've taken a single sick day, but yesterday was bad, dude. I woke up in the morning. I was just like, I can't go live. Like, I'm not going to be able to talk for 5 minutes without sneezing or anything. So it just didn't make sense to go live. But I popped a decent amount of Tylenol, and I don't have a fever. It's just like I think I caught something from my parents because they were sick, and it's not as bad. But yesterday morning it was pretty bad. But I think we got to sleep off most of it. Okay, word of the day. Interesting. Carp. We do have Palantir's AIPCon tomorrow, so and maybe a guy named Carp will be there, but let's see how you say this. Carp. All right, Carp. Not Carpe or Carpio or something ridiculous. It's just Carp. It's normal. To find fault or complain unreasonably. Drivers carp about traffic, yet refuse to carpool. Instead of appreciating the meal, he just carped about the portion size. I guess I've been carping about the market. I don't know if it's unreasonable, though. I don't know if my complaints have been completely unreasonable. I mean, we've had a lot of volatility with headlines back and forth that feel a bit ridiculous, but I probably have been carping about these markets, and I'm pretty sure everyone has as well. Dude, it's one of those things where you reset in the markets, right? You reset. Like, you were up all-time highs, everyone was happy, and then boom, you get smacked in the face. You have to go right back down, probably not to lows, like all-time lows, but, everyone's taking a decent haircut. And you kind of just deal with it, and you get ready for the hopeful rebound over the long term. My girlfriend is a big carper. Oh, my gosh. Carping about Wall Street carping? Yeah, pretty much. Pretty much. All right, cool stuff. We will be back tomorrow on the market open. and will not be live today on the market close, but tomorrow will be a fun day. You guys will see why, and it'll be an exciting day, as it usually is. No market close tomorrow either, but I do believe we'll have a market open tomorrow. And yeah, that's pretty much it. And we'll be back to our regular schedule on freaking on Monday, starting next Monday. So Matt says, why is Mitt slacking? Dude, I really didn't want to take off yesterday. Like I don't like doing that. I don't freaking, no matter rain or shine, no matter how bad I'm feeling, and I've felt pretty crappy on certain mornings, I do the show. But at some level, it's just like if you're sneezing and blowing your nose every 2 seconds, like you just know it's not going to be a good show. So it made sense to at least try to take off and get some rest. All right, I think that's it. I'll be back tomorrow. I'm gonna make another coffee with this Keurig, bro. I'm long Keurig. How much is a Keurig, bro? I'm gonna check right now. How much is a Keurig? I want to buy a Keurig machine because, yeah, dude, $70. Come on, bro. I'm getting a Keurig. I'm getting a freaking Keurig. Like, look at this thing, bro. Look at Keurig. This is. I don't know. I can't believe I've never tried a Keurig before. I tried it today at the Airbnb. It was great. It's freaking great. So I think I'm done with buying coffee. I'm just going to get a Keurig now. And we'll go long coffee. It's better than Williams Sonoma, $4,000. So we'll see. We'll see what you guys think. Don't do it. There's mold issues. Okay, I'll look at the bear cases for Keurig, but the experience today was great, dude. You fill in the water, put in the thing, takes 5 minutes. Boom, you got your coffee. So it was my first experience ever with a Keurig today. And I feel like this is the easiest way to drink coffee in the morning now. Yeah, a bunch of you are saying it's good. Nespresso is 100% better. Okay, we might have to get Nespresso instead. It was just so easy, bro. Like getting coffee, it was so easy. Like instead of having to drive, it's like you just pop in I was like, why have I never done this before? So yeah, I think we're going to make that investment and we'll have a Keurig every day, or an espresso, whatever it is. Markets are still holding up a little bit green. We'll see how they end out towards the end of the day. Again, won't be live for the market close, but I'll be live for market open tomorrow. And we'll keep going from there. All right, that's it, everybody. I got a long day ahead. Got to do some practicing for tomorrow. I think you guys already know what's happening tomorrow. I can't literally say it, but you guys already know what's happening tomorrow. So tomorrow will be fun. You guys will see. I'll post some pictures today on X today, which will make it obvious what I'm doing for tomorrow. But yeah, we'll be back on the market open tomorrow. All right, that's it. Thank you, everybody. Also, just a real quick thank you to everyone who said to get better. I didn't expect that many comments. There's like 300 of you that were like, feel better. And a decent amount of messages that were pissed that there was no show. And then I was like, I'm sick. And you're like, oh, okay, I feel better. But like, if I wasn't sick and I took off for just like, I don't feel like doing it, I think you guys would be more pissed. But you guys let me get away with it because I was sick. So everyone who was mad, I was like, oh, yeah, I'm sick. They're like, oh, okay, I feel better. But if I wasn't sick, bro, I would have had to deal with some freaking wrath and fury for missing the show today. And it makes sense, you know, like I feel the same, like with creators that I follow when they don't post. It's like, if it's part of your routine, then, you know, it's part of your routine, and it's annoying to try to find something else to fill up that time. But yeah, I think we should be good. We should be good for the rest of the week, and hopefully good for the rest of the year if we continue to not getting sick. So, all right, cool. Hopefully you enjoyed making fun of my hair. This is why I wear a hat every day, bro. I told you guys, like, my hair is freaking. Now I know how Carp feels like, at least from the hair comments, bro. Like, goodness gracious, people are just crazy. I don't know. Maybe I get a perm, bro. Maybe I get a buzz cut. I've had this hair for like years. Maybe we do. We'll figure out. We'll do something with it later. All right. Thank you, everybody. I'll see you guys tomorrow on the market open. Bye, everyone. Have a good one.